Welcome to JS Online Tuitions, and today in account we'll be looking at books of original entry. So books of original entry, these are books in which we first record transactions. Books of original entry are also referred to as day books or journals. The common books of original entry are discussed as follows. So the first one, we have sales day book. So the sales day book is also referred to as the sales journal, and the sales day book records credit sales. The second one, we have the purchases day book. So the purchases day book is also referred to as the purchases journal, and this records credit purchases. Then we also have the sales returns day book. So the sales returns day book is also referred to as the returns inwards day book. It can also be referred to as the sales returns journal or returns inwards journal. And this day book records sales returns or returns inwards. The other day book that we have the purchases returns day book. It is also referred to as the return outwards day book. This day book is also referred to as the purchases returns journal or returns outwards journal. The purchases returns day book records purchases returns or returns outwards. The other day book that we have the cash book. So the cash book records receipts and payment of cash and check. Then we also have the general journal. So the general journal includes other items that are not recorded in the other day books. So these include items that are not recorded in these other day books that we have mentioned, and this includes the sales day book, the purchases day book, the sales returns day book, the purchases returns day book, and the cash book. We can now look at the ledger. So the ledger is the main book of accounts. There are three types of ledgers, namely sales ledger, purchases ledger, and the general ledger. A sales ledger, this is where we record customer personal accounts, whereas the purchases ledger, we record suppliers personal accounts. In the general ledger, entries that remain in double entry accounts are recorded, such as relating to expenses, non-current assets, and capital. Let us now look at the types of accounts. So there are two types of accounts, namely personal accounts and impersonal accounts. Impersonal accounts are further divided into real accounts and nominal accounts. These accounts are described as follows. So the first one, I've said, we have personal accounts, and the second one, we have impersonal accounts. So we are going to start with personal accounts. So personal accounts, these are accounts which deals with business transaction carried out with person, firms, and the business. These types of accounts exist in the name of persons and firms. They include amount of credit, customers, and these are referred to as debtors, and credit suppliers, and these are referred to as creditors. Then the other type of account that I've said, we have impersonal accounts. So these are types of accounts that are not personal accounts. Impersonal accounts are made up of real accounts and nominal accounts. So we're going to start by discussing what real accounts are. So these are types of accounts in which possessions are recorded. These possessions are made up of assets of the business. Examples of real accounts are inventory, furniture, buildings, machinery, stock account, cash account, and motor vehicle account. Then let us talk about the nominal accounts. So accounts in which expenses, income, and capital are recorded is referred to as the nominal account. So we can remember that real accounts represent assets which are in use over many accounting periods. Then in this case, we can say that the nominal accounts represent values that ceases at the close of each accounting period. New expenses and incomes of the same kind will arise again in the next accounting period, and then again become extinguished with the close of the respective accounting period. Expenses are cost of running the business during the accounting period. Examples of expenses include purchases, salaries, insurance, electricity, and wages. Income or revenue is money that is earned in the business. Examples of income include sales, rent received, interest received, and discount received. So we can look at this diagram, and this diagram represents accounts. And I said that there are two types of accounts. We have personal accounts and impersonal accounts. And we have further said that impersonal accounts are divided into real accounts and nominal accounts. So that is a simple diagram that you have to know. Then let us look at terms used in financial accounting. So the first one, we have sales. Sales, these are goods that are bought by the business for resale with an aim of making profit. Sales can also be defined as the money received by the business from goods that had been previously bought for the purpose of resale. Some goods are not recorded as sales because they can be sold, but they are not bought to make profit. For example, selling and disposing of an old asset is not treated as sales, and such a transaction should not be entered in the sales account. So for example, if a company had bought some fixtures and fittings for 10,000 kwacha and it decides to dispose it off by selling off the fixtures and fittings at 7,000 kwacha, that amount won't be recorded in sales because the fixtures and fittings were not bought for resale. But in a case whereby a company that orders the same fixtures and fittings for resale for the purpose of making profit, when it sells that item, that means that we can record it as sales, since those items are being bought for resale and with an intention of making profit. So that's sales. Let us now look at purchases. So purchases are goods that are bought by the business for resale with an aim of making profit. Purchases can also be defined as amount of money spent on buying goods intended for resale in order to make profit. Any other purchases that are not intended for resale, for example, purchases of fixed assets such as land, is not treated as purchases, and such entries are not entered in the purchases accounts. So let us now look at income or revenues. So this is the amount of money received by the business from different sources, the main source coming from the sale of goods and provision of service to its customers. The other sources include commission, rent, which is income received for renting out buildings and premises. Then we have interest received on bank deposits, dividend received on shares held in other businesses or companies. So let us now look at expenses. So this is the money used when running a business. Expenses include wages and salaries, rent, electricity, and water bills. Then we also have selling and distribution expenses. We also have transport. Let us now look at creditors. So creditors are people whom we owe money. A creditor can either be an individual or group of individuals to whom money is owed for goods bought from them on credit, or for money borrowed from them for use in the business. Money owed to creditors in accounting is taken as a current liability. Then let us look at debtors. So debtors are people that owe us money. A debtor can either be an individual or group of individuals that owes money to the business for goods and services bought from the business on credit. Money owed by the debtor to the business is taken as a current asset in accounting. Let us now look at capital. So capital is the amount of money or resources invested in the business by the business owner or entrepreneurs. Let us now look at assets. Assets are anything of value owed by the business or an individual. The term assets in accounting means properties owed by the business that help in generating income or facilitate business operation. Examples of assets include land, buildings, machinery, cash at bank, cash at hand, stock of goods or materials. The term assets in accounting is only restricted to properties or resources and not human beings. Assets are divided into fixed assets and current assets. Let us now look at liabilities. So these are financial obligations that have to be repaid by the business to the creditor. Liabilities arise out of borrowing money from financial institutions or individual lenders to finance business activities and purchasing goods and services on credit. Liabilities are divided into long-term liabilities and current liabilities. Examples of liabilities include creditors, bank overdraft, debentures, and long-term bank loans. Let us now look at the importance of books of original entry. So the first importance, we have avoid overcrowding of the ledger. Then we have reduces possibilities of fraud. Then the other importance, we have improves efficiency. The other importance, we have future reference points. Then the last importance, we have reduces the risk of omission of one or both entries. Let us now look at the cash book. As we know that cash and bank transaction are types of business transaction. Most businesses in Zambia carry out cash transaction that includes cash payments and receipt. In bank transaction, which includes check received, money received by check, and check payment, money paid by the business using check. These business transactions are recorded in the cash book. A cash book is a book of original entry where cash and check receipts and payments are recorded in order of dates. And that means that these are recorded in chronological order. Credit transactions are not recorded in the cash book, but payments made to creditors by the business and money received from the debtors by the business is recorded in the cash book. The cash book has two sides: a debit side where cash received is recorded and the credit side where cash payment is recorded. Cash that is recorded in the cash book means bank notes, coins, money orders, credit transfer, check, or any other monetary payment or receipt acceptable in settlement of business debt. A cash book is said to be a book of original entry and a ledger. So it is said to be a book of original entry because any receipt or payment of cash is first recorded in the book before being posted to another ledger account. This is why there is no subsidiary book for cash transaction other than the cash book. Then the cash book is the ledger account because for every debit or credit entry made in it, there must be a corresponding debit or credit entry in other accounts in the ledger. Further, once a record is made in the cash book, it is permanently kept there. There are 4 types of cash books, namely single column cash book or 1 column cash book or simple cash book. Then we have the 2 column cash book or double column cash book. Then we have 3 column cash book or triple column cash book. Then we have the petty cash book. So this program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless. Now look at the single column cash book. So the single column cash book only records cash receipts and payment. All the cash receipts are recorded on the debit side and the cash payment on the credit side. The single column cash book is mostly used by businesses that don't have a bank account and therefore don't receive check and don't pay out money by check. So let us now look at the format of the single column cash book. So it starts with the title of the cash book. Then in the first column we have the date, in the second column we have details, in the third column we have folio, in our fourth column we have our debit, and in our last column we have our credit. Let us now look at what you need to consider when recording transaction in the single column cash book. So the first thing we have, the cash book is divided into two equal parts, the left hand side and the right hand side. The left hand side is marked with the abbreviation DR, which means debit side. The debit side records all cash that is received. The right hand side is marked with the abbreviation CR, which means credit side. The credit side records all cash that is paid out. Then transactions are recorded in order of dates, beginning with those that took place on earlier dates, followed by those that took place on later dates. Then we also have the date column is used to record dates when the transaction had to take place in their order from first date to last date. Then in the details or particulars column is where we record the name of the other transaction affected by the same transaction. With cash transaction, the first account affected is the cash account. So in the cash book, the details records the second account affected by the same transaction. Then we have the reference or folio column. Here we record the page number of other accounts or subsidiary books where the transaction is the same. Then we also have, when preparing a cash book for a new business, the amount of money used to start a business is recorded on the debit side or left hand side of the cash, and the name of the other account affected, which is written in details column, is capital. When preparing a cash book for an already existing business, we begin by recording on the debit side or left hand side the amount of cash the business has brought forward from the previous period. The name of the account still affected is capital, but this time in details column we write the word balance B/F, meaning balance brought forward to describe the transaction. Then we also have the single column cash book should be balanced at the end of each given period. Let us now look at on how you can balance a single column cash book. So the cash book is balanced at the end of a given period, say 1 month, when all the transactions have been recorded. So let us look at the following steps. So we have the first step. Make sure that all the transactions of a specific period had been properly recorded. Our second step, we have total up the amounts on the debit and credit side of the cash book, then record the totals on a separate sheet of paper. Don't record the total in the cash book at this stage. Remember, the debit side of the cash book shows the totals of all the cash receipts during a period, and the credit side shows all the cash payment of that period. Since payments of cash cannot exceed the receipts of cash, the debit side is always greater than the credit side under normal situations. Then our third step, we have subtract the smaller total from the bigger total to get the difference between the two sides. Our fourth step, we have record the difference on the smaller side, usually the credit side, as balance carried down to make the two sides equal. The date column, the last date of the closing period, usually a month, is written for the balance carried down. Then our fifth step, we have draw the horizontal line below the last figure or entry on the side with the longest list of entries or transaction entered. Draw another horizontal line at the same level on the other side. Then our sixth step, we have record the bigger total below the horizontal lines on both sides. Remember, after entering the balance carried down, which is balance C/D on the smaller side, the two sides are then equal. Underline the total of the cash book with two lines to close the cash account. Then our seventh step, we have enter the difference between the two sides again below the totals on the bigger side, which is usually the debit side, and it should be opposite to the balance carried down, which is abbreviated as C/D. Name it balance breakdown, which is abbreviated as B/D in the details column. This balance shows the amount of cash at hand at the beginning of the next period. It is therefore written with the first date of the month. Welcome to JS Online Tuitions, and today we'll continue looking at the single column cash book. And for the single column cash book, is only made up of the cash account. And the cash account is divided into the debit side and the credit side. So each and every transaction that involves bringing money into the business, we record it on the debit side. And every transaction that involves taking money out of the business is recorded on the credit side. So we have this example that we are going to use, and the example, you can see it on the screen. The example reads, the following information was obtained from Michael Zulu's books of accounts of March 1999. So we have the first transaction. So the first transaction occurred on the 1st of March. Michael started business with cash amounting to 2,200. Then on the 4th of March, received cash from Chama amounting to 150 kwacha. Then on the 7th of March, paid Daniel 200 kwacha. Then on the 8th of March, bought plant and machinery and paid by check 500 kwacha. Then on the 17th of March, purchased goods for cash amounting to 300 kwacha. Then on the 18th of March, paid Miriam amounting to 50 kwacha. Then on the 21st of March, bought goods on credit from Kasakwa amounting to 150 kwacha. Then on the 22nd of March, paid for transport by cash amounting to 50 kwacha. Then on the 25th of March, sold goods on cash amounting to 500 kwacha. Then on the 31st of March, paid salaries amounting to 450 kwacha. So for us to draw up the single column cash book, the first thing that we're going to do is to put up the title. And the title that we're going to put up is going to read as follows. Since we're preparing the single column cash book for Michael Zulu, so we can put it up as Michael Zulu single column cash book for the month of March 1999. So that's the first procedure that we're going to do. We're going to write our title. So I'm going to write the title on the whiteboard. So Michael Zulu Zulu's single column cash book for the month of March 1999. So we are done putting up our title, and since all the transaction occurred in kwacha, so we can put our kwacha here. You can also put our kwacha, and since the year that we're using is 1999, we can put our 1999 in the details column. And I've said that the things that we're going to record on the debit side are the transactions that are bringing money into the business, and everything that takes away money from the business, we're going to record it on the credit side. So we can start with our first transaction. So on the 1st of March, Michael started business with cash amounting to 2,200. So we can take note that the 2,200, that's capital, and we're going to record that on the debit side. So we're going to say on the 1st of March, we have capital, and that's going to be recorded on the debit side as 2,200. Then on the 4th of March, received cash from Chama amounting to 150. So you have seen received cash, so which means that cash is coming into the business. So we are going to debit Chama by 150. So we are going to say 4th of March, Chama, we are going to debit that amount 150. Then on the 7th of March, paid Daniel amounting to 200 kwacha. So which means man was going out of the business and they're going to record it on the credit side. So we have 7th of March. So Daniel amounting to 200 kwacha. Then on the 8th of March, bought plant and machinery and paid by check amounting to 500 kwacha. So for this transaction, it was paid by check, but we are actually looking at the cash book, and for the cash book, we only look at the transaction that had to take place through cash. So it means this transaction is not going to be recorded. Then on the 17th of March, purchased goods for cash amounting to 300 kwacha. So purchased goods for cash amounting to 300 kwacha, that means that money was going out of the business, and we're going to record our purchases on the credit side. So we have 17th. So we have purchases as 300 on the credit side. Then on the 18th, paid Miriam amounting to 50 kwacha. That means that man was going out of the business, and we're going to record that on the credit side. So 18th. In our details column, we're going to say Miriam. Then we are going to credit that amount. Then on the 21st of March, bought goods on credit from Kasakwa amounting to 150. So as you can see, that type of a transaction is a credit transaction. So we are not going to record it in our cash book. Then on the 22nd of March, paid for transport by cash amounting to 50 kwacha. So this type of transaction is taking money out of the business. So we're going to credit transport by 50 kwacha. So 22nd of March, we'll say transport by 50 kwacha. Then on the 25th of March, sold goods on cash amounting to 500 kwacha. So which means that the business had sold goods. That means that money was coming into the business. So we are going to debit that amount. So we have 25th of March, we say sales. We're going to debit that amount. Then on the 31st of March, paid salaries amounting to 450, and that type of transaction is taking money out of the business. We're going to record it on the credit side. 31st of March, we have salaries, record it on the credit side. So we are done recording our transaction. So the next thing that we're going to do is to find our total. So that's the next step that we're going to do. And how we are going to do, we're going to add the debit side and the credit side. Then the bigger amount, we're going to record it on both the debit side and the credit side. So let me get my calculator so that I can add these figures. So on the debit side, I have 2,200 plus 150, then plus 500. So my answer that I'm having 2,850. So this is on the debit side. So you also do the same on the credit side. You write down your total on a separate piece of paper. On the credit side, we have 200. So I'll say 200 plus 300 plus 50 plus 50 plus 450. The answer that I'm having is 1050. So as you can see, the higher amount there, we have 2850. So that amount, we're going to record it on the debit side and on the credit side. So we'll say 2850 on the debit side. We're also going to say 2850 on the credit side. So we are supposed to write the balance carried down. And the balance carried down is recorded at the end of the month. So the month is ending on the 31st of March. That's where we're going to record our balance carried down. And since we have identified that the side that is having a low amount is the credit side, and the side that is having the high amount is the debit side. So we're going to find the difference. So we're going to say 2850 minus 1050. So my answer is 1800. So we are supposed to put 1800 on the credit side so that it can balance up with the debit side. So after we do that, we now record our balance brought down. And the balance brought down is recorded at the next month, at the beginning of the next month. So we're going to say 1st of March. 1st of April, sorry. 1st of April. So this is going to be balance brought down. So our balance brought down to come here. It's 1800. So that's how you can put up a single column cash book. So where you have questions, please ask in the group. We'll meet you next time. The person that was behind the cameras was Mr. Ablet Ukwe. Peace out. Let us now look at the two-column cash book. Some businesses have bank accounts. This means that such kind of businesses can receive payment through the banks from their customers when they deposit the money into their accounts. The business is also able to pay out money using the bank. Such type of a business that have a bank account, the appropriate cash book to use in recording bank transaction is the two-column cash book. The two-column cash book is made up of two accounts, namely the cash account and the bank account. Both of these accounts have the debit and the credit side. On the debit side of the cash account, cash receipts are recorded, and on the credit side of the cash account, cash payments are recorded. On the debit side of the bank, money received by check is recorded here, and on the credit side of the bank account, money paid by the business using check is recorded. The two-column cash book is also referred to as the double-column cash book. Let us now look at the format of the two-column cash book. So the first thing that we have is the title of the cash book. In the first column we have date. In our second column we have details. In our third column we have folio. Then in our fourth column we have the cash account. And the cash account is separated into the debit side and the credit side. And in the last column we have the bank account, and the bank account is separated into the debit and the credit side. Then let us now look at recording transaction in two-column cash book. So all amounts of money received in cash form by the business are recorded in the cash account column on the debit side, and all the money received by the business through checks are recorded on the debit side of the two-column cash book. All money that is paid out by the business in form of cash is recorded on the credit side of the cash account, and all the money that is paid out by check is recorded on the credit side of the bank account of the two-column cash book. Then let us look at recording contra entries. A contra entry is a transaction that affects both the cash account and the bank account. Its double entry is completed in the same cash book by recording on both sides of the same cash book, that is, in the column or account that increases, we record on the debit side, and in one that reduces, we record on the credit side. That means that if money is increasing in our cash account, we're going to record it on the debit side. And if money is reducing in our bank account, we're going to record it on the credit side. And this is going to be recorded on the same date. And that is going to signify a contra entry. So there are two major contra entries in accounting. The first one, we have cash deposits into the bank. Then we also have cash withdrawn from the bank for office use. Let us start with cash deposited in the bank. This means cash taken from the business and banked. This transaction increases the value of bank account and reduces the value of the cash account. Therefore, in the 2-column cash book, we record it as follows. Debit bank account. This means that in the bank account, record the money deposited on the debit side. Then credit cash account. This means that in the cash account, record the money by which cash in the business has reduced on the credit side. Then we have cash withdrawn from the bank for office use. This transaction is also known as cashing a check, since withdrawing money from your own current account is done writing a check to pay yourself. This means that the value of the bank account reduces and the cash at hand increases. So in the 2-column cash book, this transaction is affected as follows. Debit cash account, meaning the cash column record the amount of money by which it has increased on the debit side. Then credit bank column, meaning that in the bank column record the amount of money withdrawn on the credit side. So we can say in the two transaction, one of the two accounts, cash account and bank account, is debited and the other is credited. So an entry is made on both sides of the cash book. While making a contra entry, write the letter C against the entry in the folio or reference column. This means that we don't have to record this entry in any other account in the ledger. Then let us look at recording cash sales directly banked in the 2-column cash book. Cash sales directly banked means that the business has sold goods to a customer who has just deposited the money in the bank account of the business. This is not a contra entry, since bank account increases without a reduction in the cash at hand. When recording such a transaction, we just record the amount by which bank has increased on the debit side in the bank column, and in the details account we record sales because it is the other account affected. Let us now look at recording drawings in the 2-column cash book. The term drawings in accounts refers to cash or goods taken out of the business by the owner for personal use. In the cash book, however, we only record cash taken out, since the cash book only records cash transfers in and out of the business. Cash drawings are recorded by writing the amount taken out of the business for personal use in the cash column on the credit side of the 2-column cash book. In the details column, the word drawings is written because this is the other account affected. Drawings can also be in the way of taking money from the bank account of the business for personal use. The amount of drawings is recorded on the credit side of the 2-column cash book. The business owner should be, as much as possible, try to avoid drawing money or goods out of the business, since it reduces business capital. Then let us look at recording dishonored checks in the 2-column cash book. So a dishonored check is a type of check that is refused to be issued up by the bank because of some reasons. Some reasons that can make a check to be dishonored: having insufficient amount of money on the account of the drawer, or drawer signature differing from his or her specimen signature in the bank. The amount of figures in words differs with the amount of figures in numbers. Taking the check at the bank on an outdated date. For example, if a customer buys goods and pays by check, the amount of money on the check is recorded on the debit side in the bank account in the 2-column cash book. Therefore, when the check is dishonored, the amount of money which was shown to have been received should be taken out of the cash book by now recording it on the credit side in the bank account where money going out of the business is recorded. Then we have recording bank overdrafts in the 2-column cash book. Sometimes a business holding a current account with a bank can be allowed to withdraw more money that he has on his account. This is a short-term credit facility or loan called a bank overdraft, and the interest is charged on it. In case the business was given a bank overdraft in the previous period, means that money received on its bank account was less than the money it withdrew or paid out, and hence the credit side, meaning where payments are done from, was greater than the debit side where received money is recorded. Therefore, the last balance on its bank account or balance breakdown must have been on the credit side, since the balance carried down is put on the smaller side, which in this case must be on the debit side. A bank overdraft sometimes is written as 1st January 2013 balance brought forward, cash at bank, and that's going to be put under the credit side of the bank column. Therefore, a bank overdraft is recorded by entering the amount of money on the credit side, since the business must begin the new period by first paying it to zero balance and details column. We write balance brought forward, which is balance B/F. Then let us now look at balancing the 2-column cash book. When balancing the 2-column cash book, follow the same procedure as it is done in a single-column cash book, except that each account is handled separately. Begin with the cash account and total up the cash received in the debit cash column. Then subtract the cash spent in the credit cash column. Insert the difference between the two totals on the smaller side, which is usually the credit side, to make the two sides equal. This is called balance carried down, and it is given the last date of the period. After writing the total on the same sides, open the new period with the same figure as a balance breakdown on the debit side. Then go to the bank column and do the same procedure. The bank column can have a greater credit side than the debit side total in case of an overdraft. In such a case, balance carried down appears on the debit side, which is the smaller side, and the balance breakdown appears on the credit side, which is the bigger side. Welcome to JS Online Tuitions. So continue looking at the 2-column cash book, and we have this example that we're going to use. The following details were obtained from the books of Gabriel for the month of July 2002. Enter the following transaction in the 2-column cash book. So on the 1st of July, balance brought forward, we have cash amounting to 7,000, which is on the debit side. Then we have bank amounting to 5,000, which is on the credit side. Then on the 2nd of July, bought premises by cash amounting to 300 kwacha. 4th of July, paid for telephone and postage by check amounting to 150 kwacha. Then on the 11th of July, cash sales amounting to 75 kwacha paid direct into the bank. Then on the 15th of July, paid salaries and wages by check amounting to 467 kwacha. Then on the 16th of July, purchased goods by cash amounting to 550 kwacha. On the 17th of July, sold goods to Frank amounting to 90 kwacha in cash. On the 21st of July, deposited cash into bank amounting to 250 kwacha. On the 22nd of July, cash drawings amounting to 190 kwacha. On the 26th of July, received a check from Elisha amounting to 45 kwacha. Then on the 31st of July, paid the creditor Teza by cash amounting to 500 kwacha. So we are supposed to write down the 2-column cash book. And the person that we are preparing this cash book is Gabriel. So the first thing that I'm going to do is to write down the title. So the title I've already written. I have Gabriel's 2-column cash book for the month of July 2002. So we'll start by recording the first transaction which occurred on the 1st of July. And it reads, balance brought forward. We have cash amounting to 7,000 on the debit side, and we have bank amounting to 5,000 on the credit side. And we know that the amounts that we are recording, they are in kwacha, so we're going to put our case. And the year that we are using is 2002. So we have the first transaction which occurred on the 1st of July. So on the 1st of July, we have cash, and cash showed a debit balance which is 7,000. So we're going to record 7,000 on the debit side. And we know that this is balance brought forward. So in our folio section there, we're going to say balance brought forward. Then we are also being told that bank is on the credit side with the amount of 5,000. So we say bank. This is also balance brought forward. So this is going to be recorded on the credit side as 5,000. Then on the 2nd of July, bought premises by cash amounting to 300 kwacha. So for this transaction, we're going to record it on the credit side of the cash book because money is going out of the business. So we have 2nd of July. In our details column, we're going to say premises. And since we are buying premises, that means that money is going out of the business. And since we bought by cash, we're going to credit the cash account. So we're going to have 300 on the credit side. Then on the 4th of July, paid for telephone and postage by check amounting to 150. So here again, money is going out of the business, and since we paid by check, that means that we're going to credit the bank account. So we have 4th of July. We're going to say telephone and postage. So telephone and postage, we're going to credit that amount to the bank account, which is 150. Then on the 11th of July, cash sales amounting to 75 paid direct into the bank. So that means that money was coming into the business, and since we made cash sales and it was deposited into the bank, that means that we're going to debit the bank account. So we have 11th of July, and in our details we're going to say sales, and we're going to debit that amount to the bank account, which is 75. Then on the 15th of July, paid salaries and wages by check amounting to 467. So for this type of transaction, it is taking money out of the business, and that means that we're going to credit the bank account. So we have 15th of July, we'll say salaries and wages, and we're going to record that on the credit side as 467. Then on the 16th of July, purchased goods by cash amounting to 550. So purchased goods by cash amounting to 550. So this type of transaction is taking money out of the business. That means that we're going to credit the cash account. So we have 16th of July and we're going to say purchases. And we're going to credit our purchases in the cash account with 550. Then on the 17th of July, sold goods to Frank amounting to 90 kwacha in cash. In this type of transactions, bringing money into the business. That means that we're going to debit the cash account. So 17th of July. So in our details, we're going to say Frank. And we're going to debit that amount, which is 90 kwacha. Then on the 21st of July, deposited cash into bank amounting to 250. So this type of transaction is a contra entry transaction. In the contra entry transaction area, I'd say that this type of transaction where one account is debited and one account is credited. So in this case where money is deposited or cash is deposited into the bank, that means that the cash account is going to be credited and the bank account is going to be debited. And in our folio section, we're going to put the letter C, which represents a contra entry transaction. So we'll say 21st of July. So since this is a contra entry, we're going to start by writing the account that's going to be debited. So we're going to say bank stroke, and we're going to end with the account that is being credited, which is cash. So for the cash there, we're going to credit that amount, which is 250, and we're going to debit the same amount to the bank account, 250. Then on the 22nd of July, cash drawings amounting to 190 kwacha. And drawings, you know, that is taking money out of the business for personal use. And since money is taken for personal use, that means that money is going out of the business, and that means that that type of a transaction must be recorded on the credit side. So we're going to record it on the credit side of the cash account. So we have 22nd of July, we're going to say drawings. And we're going to credit that amount, which is 190. Then on the 26th of July, received a check from Elisha amounting to 45 kwacha. So this type of transaction is bringing money into the business, and that means that we are going to debit the bank account. So 26th of July, in our details, we're going to say Elisha. We're going to debit that amount, which is 45. Then on the 31st of July, paid the creditor Teza by cash amounting to 500 kwacha. So this type of transaction is taking money out of the business, and since we paid by cash, that means that we are supposed to credit the cash account. So 31st of July, we're going to say Teza will credit that amount. So the next thing that we're going to do is to add the debit side and the credit side of the cash account, and we're going to record on the totals the larger amount. So we're going to add 7,000 plus 90 on the debit side, and we are getting 7,090. Then if we add on the credit side, we're going to add 300 plus 550 plus 250 plus 190, then plus 500, the answer that we are getting is 1790. So we can see that our 790 is greater than 1790. So we're going to record 7090 on both the debit side and the credit side. So that's going to be our total. So say 7090 on the debit side and 7090 on the credit side. So here we're supposed to find our balance carried down, and this is recorded on the end of the month. So this is going to be on the 31st of July. And how we find our balance carried down, we're going to find the difference of the side that is having a smaller amount, and the side that is having the smaller amount, we say this is the credit side. So we're going to say 7090 minus the total of the credit side, and the total of the credit side, we said it is 1790. So the answer there is going to be 5300. So here we can say our balance breakdown is going to be 5300 on the debit side, and this will be in the next month. So the first day of the next month, which is 1st of August. Then we'll go to the bank account. To the bank account, we're going to add 75 plus 250 plus 45. So the answer there is 370. Then on the credit side, I have 5000 plus 150 plus 467. So the answer there that I'm getting is 5617. So we can see that 5617 is larger than 370. So we're going to record our 5617 as our total. So say 5617 on the debit side and 5617 on the credit side. So here we're supposed to find our balance carried down on the debit side. And how you find the balance carried down, you just say the larger amount that you have found, which is the total, minus the difference, which is the debit side, the total of the debit side. So we're going to say 5617 minus 370. So the answer that I'm having is 5247. And to put it on the to bring it down, to find our balance breakdown here, we're going to record it on the credit side as 5247. So that's how you can draw up the 2-column cash book. So this program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless. Welcome to JS Online Tuitions. So continue looking at the 2-column cash book, and we have this example that we're going to use. The following details were obtained from the books of Gabriel for the month of July 2002. Enter the following transaction in the 2-column cash book. So on the 1st of July, balance brought forward, we have cash amounting to 7,000, which is on the debit side. Then we have bank amounting to 5,000, which is on the credit side. Then on the 2nd of July, bought premises by cash amounting to 300 kwacha. 4th of July, paid for telephone and postage by check amounting to 150 kwacha. Then on the 11th of July, cash sales amounting to 75 kwacha paid direct into the bank. Then on the 15th of July, paid salaries and wages by check amounting to 467 kwacha. Then on the 16th of July, purchased goods by cash amounting to 550 kwacha. On the 17th of July, sold goods to Frank amounting to 90 kwacha in cash. On the 21st of July, deposited cash into bank amounting to 250 kwacha. On the 22nd of July, cash drawings amounting to 190 kwacha. On the 26th of July, received a check from Elisha amounting to 45 kwacha. Then on the 31st of July, paid the creditor Teza by cash amounting to 500 kwacha. So we are supposed to write down the 2-column cash book. And the person that we are preparing this cash book is Gabriel. So the first thing that I'm going to do is to write down the title. So the title I've already written. I have Gabriel's 2-column cash book for the month of July 2002. So we'll start by recording the first transaction which occurred on the 1st of July. And it reads, balance brought forward. We have cash amounting to 7,000 on the debit side, and we have bank amounting to 5,000 on the credit side. And we know that the amounts that we are recording, they are in kwacha, so we're going to put our case. And the year that we are using is 2002. So we have the first transaction which occurred on the 1st of July. So on the 1st of July, we have cash, and cash showed a debit balance which is 7,000. So we're going to record 7,000 on the debit side. And we know that this is balance brought forward. So in our folio section there, we're going to say balance brought forward. Then we are also being told that bank is on the credit side with the amount of 5,000. So we'll say bank. This is also balance brought forward. So this is going to be recorded on the credit side as 5,000. Then on the 2nd of July, bought premises by cash amounting to 300 kwacha. So for this transaction, we're going to record it on the credit side of the cash book because money is going out of the business. So we have 2nd of July. In our details column, we're going to say premises. And since we are buying premises, that means that money is going out of the business. And since we bought by cash, we're going to credit the cash account. So we're going to have 300 on the credit side. Then on the 4th of July, paid for telephone and postage by check amounting to 150. So here again, money is going out of the business, and since we paid by check, that means that we're going to credit the bank account. So we have 4th of July. We're going to say telephone and postage. So telephone and postage, we're going to credit that amount to the bank account, which is 150. Then on the 11th of July, cash sales amounting to 75 paid direct into the bank. So that means that money was coming into the business, and since we made cash sales and it was deposited into the bank, that means that we're going to debit the bank account. So we have 11th of July, and in our details we're going to say sales, and we're going to debit that amount to the bank account, which is 75. Then on the 15th of July, paid salaries and wages by check amounting to 467. So for this type of transaction, it is taking money out of the business, and that means that we're going to credit the bank account. So we have 15th of July, we'll say salaries and wages, and we're going to record that on the credit side as 467. Then on the 16th of July, purchased goods by cash amounting to 550. So purchased goods by cash amounting to 550. So this type of transaction is taking money out of the business. That means that we're going to credit the cash account. So we have 16th of July and we're going to say purchases. And we're going to credit our purchases in the cash account with 550. Then on the 17th of July, sold goods to Frank amounting to 90 kwacha in cash. In this type of transactions, bringing money into the business. That means that we're going to debit the cash account. So 17th of July. So in our details, we're going to say Frank. And we're going to debit that amount, which is 90 kwacha. Then on the 21st of July, deposited cash into bank amounting to 250. So this type of transaction is a contra entry transaction. In the contra entry transaction area, I'd say that this type of transaction where one account is debited and one account is credited. So in this case where money is deposited or cash is deposited into the bank, that means that the cash account is going to be credited and the bank account is going to be debited. And in our folio section, we're going to put the letter C, which represents a contra entry transaction. So we'll say 21st of July. So since this is a contra entry, we're going to start by writing the account that's going to be debited. So we're going to say bank stroke, and we're going to end with the account that is being credited, which is cash. So for the cash there, we're going to credit that amount, which is 250, and we're going to debit the same amount to the bank account, 250. Then on the 22nd of July, cash drawings amounting to 190 kwacha. And drawings, that is taking money out of the business for personal use. And since money is taken for personal use, that means that money is going out of the business, and that means that that type of a transaction must be recorded on the credit side. So we're going to record it on the credit side of the cash account. So we have 22nd of July, we're going to say drawings. And we're going to credit that amount, which is 190. Then on the 26th of July, received a check from Elisha amounting to 45 kwacha. So this type of transaction is bringing money into the business, and that means that we are going to debit the bank account. So 26th of July, in our details, we're going to say Elisha. We're going to debit that amount, which is 45. Then on the 31st of July, paid the creditor Teza by cash amounting to 500 kwacha. So this type of transaction is taking money out of the business, and since we paid by cash, that means that we are supposed to credit the cash account. So 31st of July, we're going to say Teza will credit that amount. So the next thing that we're going to do is to add the debit side and the credit side of the cash account, and we're going to record on the totals the larger amount. So we're going to add 7,000 plus 90 on the debit side, and we are getting 7,090. Then if we add on the credit side, we're going to add 300 plus 550 plus 250 plus 190, then plus 500. The answer that we are getting is 1790. So we can see that our 790 is greater than 1790. So we're going to record 7090 on both the debit side and the credit side. So that's going to be our total. So say 7090 on the debit side and 7090 on the credit side. So here we are supposed to find our balance carried down, and this is recorded on the end of the month. So this is going to be on the 31st of July. And how we find our balance carried down, we're going to find the difference of the side that is having a smaller amount, and the side that is having the smaller amount, we say this is the credit side. So we're going to say 7090 minus the total of the credit side, and the total of the credit side, we said it is 1790. So the answer there is going to be 5300. So here we can say our balance brought down is going to be 5300 on the debit side, and this will be in the next month. So the first day of the next month, which is 1st of August. Then we'll go to the bank account. To the bank account, we're going to add 75 plus 250 plus 45. So the answer there is 370. Then on the credit side, I have 5000 plus 150 plus 467. So the answer there that I'm getting is 5617. So we can see that 5617 is larger than 370. So we're going to record our 5617 as our total. So say 5617 on the debit side and 5617 on the credit side. So here we're supposed to find our balance carried down on the debit side. And how we find the balance carried down, you just say the larger amount that you have found, which is the total, minus the difference, which is the debit side, the total of the debit side. So we're going to say 5617 minus 370. So the answer that I'm having is 5247. And to put it on the to bring it down, to find our balance brought down here, we're going to record it on the credit side as 5247. So that's how you can draw up the 2-column cash book. So this program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless. Let us now look at the 3-column cash book. A 3-column cash book is a book that is made up of 3 columns, namely the cash column, bank column, and the discount column. In the 3-column cash book, an addition of a discount column is added to a 2-column cash book. If during a financial period the business had to receive or allow discount, in this case the business will prepare a 3-column cash book. The word discount means a reduction made on the original price of goods by the seller. Discount can either be discount allowed or received. Discount allowed is when the business allows a reduction in the original of goods sold, while discount received is when the business receives a reduction in the original price of goods bought. When balancing the 2-column cash book, the cash account and the bank account are balanced like in the column cash. The discount allowed and discount received are only totaled. So this program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless. Let us now look at the 3-column cash book. So we have this example that we're going to use. You are required to prepare a 3-column cash book for Mary's transactions that are given below for the month of June 2002. So we have June 2002. So we have 1st June. Balance brought forward. We have cash in hand amounting to 2,560 on the debit side. Then we have bank amounting to 1,567 on the debit side. So the first thing that we're going to do is to write down our title. In the title I've already written, so we have Mary's 3-column cash book for the month of June 2002. And since we know that the currency that we've been given is kwacha, I'm going to put our case. And the year that we are using is 2002, so put our 2002. So the first transaction occurred is on the 1st of June. So we are 1st of June, and we have cash in hand amounting to 2,560. So we're going to say cash. Then in the folio column there, we're going to say balance brought forward. So we're going to record it on the debit side, 2,560. Then bank is also showing a debit balance. So this is balance brought forward. So we're going to record it on the debit side of the bank account, and the amount is 1,567. Then on the 2nd of June, paid salaries by check amounting to 250 kwacha. So this type of transaction is taking money out of the business. That means that we're going to record it on the credit side of the bank account. So we are going to say salaries, and we're going to credit that amount. So we're going to have 250. Then on the 6th of July, deposited cash amounting to 150 kwacha. So deposited cash amounting to 150 kwacha. So this type of transaction is a contra entry transaction, and that means that the cash account is going to be credited and the bank account is going to be debited. So we're going to say bank stroke cash. So this is a contra entry transaction. The cash account is going to be credited with 150. Then the bank account is going to be debited with 150. On the 9th of June, sold goods by cash amounting to 324. So this type of transactions bringing money into their business. That means that we're going to debit the cash account. So we're going to say sales, and we're going to debit 324. Then on the 13th of June, paid Carol by check 250 less 25%. So paid Carol by check 450 less 25%. So this type of transaction is taking money out of the business. That means that we're going to credit the bank account. And since we paid Carol, that means that we received some discount. So the first thing that we're going to do is to calculate the amount of a discount that we received. So we're going to say 25% of 450, and the answer that we are having is 112.5. So that one we're going to record it on discount received. So we have 112.5, and since we are paying Carol by check, that means that money was going out of the business. And to find our amount that we're going to record, we're going to say 450 minus 112.5. The answer that we're going to have is 337.5. And here in our details we can say Carol. So that's how you can record that type of transaction. Then on the 14th of June, Drew from bank for office used 150 kwacha. So this type of a transaction is a contra entry transaction, and for this type of transaction, the money in the bank account is going to reduce and the money in the cash account is going to increase. So we're going to say cash stroke bank. So we're going to debit the cash account. So we're going to debit it by 150, and we're going to credit the bank account by 150. Then on the 15th of June, received cash of 155 for goods sold to Violet and paid her 5 kwacha. So received cash, that means that money was coming into the business, so we're going to debit the cash account. And since we allowed Violet a discount of 5 kwacha, we're going to record that 5 kwacha in discount allowed. So 15th of June, we're going to say Violet. So since the business was receiving that amount, we're going to debit the cash account 155, and we allowed a discount of 5. Then on the 19th of June, sold goods on cash amounting to 45 kwacha. So this type of transaction is bringing money into the business, so which means we're going to debit the cash account. So on the 19th of June, we're going to say sales, the amount of 45. Then on the 25th of June, paid Michael by check amounting to 100 kwacha less 5% discount. So paid Michael by check 100 less 5% discount. So the first thing that we're going to do is to calculate the discount received, the amount of discount that we received since we paid Michael. So we're going to say 5% multiplied by 100, and our answer that we're going to have, that's 5. And since we paid by check, that means that money was going out of the business, and the amount of money that we're going to record on the credit side of the bank account, we're going to say 100 minus the 5 kwacha discount that we received, and we're going to have 95. So we can say 25th of June. In our details, we're going to say Michael. Since we paid Michael by check, we're going to credit the bank account by 95, and since we received discount, we're going to record our 5 kwacha there. Then on the 27th of June, bought stationery by cash amounting to 50 kwacha less 2% discount. So the first thing that we're going to do is to calculate the amount of discount that we received, and to calculate the amount of discount, just say 2% of 50. So 2% of 50, that's 1 kwacha. That means that we received a discount of 1 kwacha. And since we bought stationery by cash, that means that we need to credit the cash account. So we're going to say 50 minus the discount that we received, which is 1 kwacha. That means that we're going to credit the cash account by 49. So in our details column, we're going to say stationery. So we're going to record 49 on the credit side of the cash account. Then since we are buying, that means that we received a discount of 1 kwacha. Then on the 29th of June, purchased goods by cash amounting to 56 kwacha. So this type of transaction is taking money out of the business. That means that we're going to record it on the credit side of the cash account. We're going to say purchases, record it on the credit side, 56. Then on the 31st of June, paid rent by check amounting to 90 kwacha. So also this type of transaction is taking money out of the business, and since we paid by check, which means that we're going to credit the bank account. Credit the bank account by 90. So since we are done recording our transaction, the next thing that we're going to do is to find our totals, and we're going to find the balance carried down and the balance brought down. So we're going to start with the cash account. So we're going to add the debit side and credit side. So you're going to discover that the debit side is higher than the credit side, and the total that we are having on the debit side is 3,234. So we're going to record it on the debit side, and we're going to record it on the credit side. So here we're supposed to calculate the balance carried down, and this is recorded on the end of the month, so the 1st of June. So we're going to say 3,234 minus our credit side, minus the total of the credit side, and the total of the credit side is 255. So when we find the difference there, the answer that we're going to have is 2,979. And to find our balance brought down, that's going to be 2,979 on the debit side, and this is recorded on the first day of the month of the next month. So that's going to be on the 1st of July. So we're going to do the same with the bank account. We're going to add the debit side and the credit side, and we're going to get a higher figure. So we're going to discover that the debit side is higher than the credit side, and the amount that we are having is 1,717. So we're going to record it on both the debit side and credit side. Then we'll subtract the total of the credit side from 1,717 so that we can find our balance carried down. So there, our balance carried down is going to be 794.5. So to record our balance brought down, we're going to say 794.5. And to find the totals of discount received and discount allowed, we don't find balance carried down or balance brought down for discount received in discount allowed. We just record the totals how they appear. So on the on discount allowed, we just have 5, so we're going to put our 5 there. Then on the discount received, we have 112.5 plus 5 plus 1. The answer that I'm having is 118.5. So that's how you can record the 3-column cash book. Where you have questions, please ask in the group. Thank you. This program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless. Welcome to JS Online Tuitions. Today in accounts, we'll be looking at the sales day book, the purchases day book, the returns inwards day book, the returns outwards day book, and the general channel. So before we look at these day books, I just want to let you know that our online tuitions are up and running. We provide the following subjects: mathematics, science, biology, and accounts. The tuitions, they go at 100 kwacha per subject, and that's per month. For further information, you can text me on WhatsApp on 0973023620. So we are going to start with the sales yearbook and the sales ledger. So the sales yearbook is a book of original entry where credit transactions are recorded from copies of invoices issued to debtors before posting to the ledger in order of dates. When the goods have been sold on credit to the buyer by the seller will send the buyer a document showing full details of the goods sold and the prices of the goods. This document is called an invoice. It is known to the buyer as the purchaser's invoice and to the seller as the sales invoice. When the seller sells goods on credit to the buyer is given the original invoice and the seller remains with the carbon copy. The information that is recorded in the sales yearbook is obtained from carbon copies of the sales invoice. So the diagram below shows an example of an invoice. In this example of an invoice, we have your purchase order, and the purchase order is 10/A/980. Then we have the invoice number. The invoice number is 16,554. Then we have the seller there on the top right, and the seller is J Siwale. Then the location of J Siwale is 7 over warehouse, Chipata, LE12AP. Then the date that it was issued is 11th of April 2018. Then it was going to the buyer. The buyer there we have Hamlet, and his address is 45 Charles Street, Mandevo. Then we have the unit there. Then we have total. So looking at the details, we have 5 cases of candle. So per unit it's 5 kwacha. That means that to find the total there, we're going to say 5 cases of candle multiplied by 1 unit, which is 5 kwacha. So we say 5 multiplied by 5, the total we're going to have 25. Then we have 8 sheets from rubber, so we'll say 8 multiplied by 10 there, and we have our total as 80. Then we have 10 sheets blue cotton going at 20 kwacha per unit. To find the total, we're going to say 10 multiplied by 20, we're going to have 200. So there we can find the totals of the amount. So we have 25 plus 80 plus 200. The answer is 305. Then the terms there, we have 20% cash discount if paid within 1 month. Then let us look at making entries in the sales yearbook and the sales ledger. All credit sales are recorded in the sales yearbook in order of dates. After all the credit sales have been recorded, the amounts are treated, and this shows the total credit sales for the period. The personal accounts of the customers in the sales ledger are debited with the amount of sales. The total credit sales is credited to the sales account in the general ledger, thus completing the double entry. If posting is done accurately, the sum of the individual amounts to the individual customers' amounts in the ledger should agree with the amount of credit sales in the sales ledger. Let us now look at the format of the sales yearbook. So the format of the sales yearbook can be given in 2 ways. The 2 formats include the first table not having the amount column and the second table having the amount column. The table having the amount column is used when the buyer is given the trade discount. So we have that first format, and for the first format we have title of the sales yearbook, and in the first column we have date, in the second column we have details, in the third column we have invoice number, in the fourth column we have folio, and in the last column we have the invoice total. So the date just shows when the transaction took place. Then for the details there, we are going to put the name of the debtor or the name of the customer. Then the invoice number there, we can get it from the question. Then the folio there shows where that type of transaction has to be recorded in the ledger. So in this case, we are looking at the sales yearbook. That means that we're supposed to put the sales ledger, and the invoice total there is just the total amount. Let us look at the second format, and for the second format, the first thing that we have is title of the sales yearbook. Then we have date, details, invoice number, folio, amount, and invoice total. So there, the only difference is that in the first format we did not have the amount column, but in our second format we have the amount column. So what do we record in the amount column? So the transactions that are recorded in the amount column is cases whereby there was a discount or some amount was paid by cash. So which means some deductions have to be made before putting that amount in the invoice total. Welcome to JS Online Tuitions. Today in accounts we'll be looking at the sales daybook. So the sales daybook is also referred to as the sales journal. To give you the definition of the sales daybook, is defined as a book of original entry that records credit transactions that are obtained from copies of invoices that are issued to debtors before posting to the ledger in order of dates. In this definition, I'm going to put it on the whiteboard so that you can follow through. So I've said the sales daybook. Sales daybook is the book of original entry that is obtained from copies of invoices issued to debtors before posting to the ledger in order of dates. So when goods have been bought by the buyer on credit from the seller is going to send a document to the buyer. And this document is going to show full details of the goods, and it's going to show the number of goods that have been bought on credit, and it's going to show the prices of those goods. So that document is referred to as an invoice. And to the buyer, it is referred to as the purchaser's invoice, and to the seller, it is referred to as the sales invoice. So I've said when goods have been bought on credit by the buyer from the seller, the seller is going to send a document showing full details of goods bought and their prices. And I've said that this document is referred to as an invoice. So this document is called an invoice. So this invoice from the buyer, it is referred to as the purchaser's invoice, and from the seller side, it is referred to as the sales invoice. So the same invoice from the buyer there, we can say it is referred to as the purchaser's invoice. And from the seller's side, it is referred to as the sales invoice. So when goods have been bought by the buyer on credit, the seller is going to give the buyer an original invoice. That means that the seller is going to remain with carbon copies. So when writing down the sales yearbook, us as the company, we are going to use the information that is obtained from carbon copies of the sales invoice. So that's the point that you need to take into consideration. All the details that are recorded in the sales yearbook, the information is obtained from carbon copies of the sales invoice, since the original goes with the buyer. So the information recorded in the sales yearbook is obtained from carbon copies of the sales invoice. So this is the definition and the introductory part of the sales yearbook. Now we need to take into consideration what we need to take into place when making entries in the sales yearbook and in the sales ledger. So the considerations that we need to put in place. So say making entries in the sales yearbook and sales ledger. So let us now look at making entries in the sales yearbook and in the sales ledger. So information in the sales yearbook is recorded, and after recording the information, you are going to find the total. And that total is going to show the credit sales for that period. Then after you record that in the sales yearbook, for each personal account in the sales ledger, that means that those personal accounts have to be debited. The reason why they have to be debited, because the debtors will be receiving the amounts of goods, and those goods are not paid for. Since we have said the sales yearbook records credit transactions. So for example, I'll give an example. We have this company, and this company is owned by Musa. This is just a short example to give you a clarity why the personal accounts have to be debited. So Musa, for example, sells goods on credit to Hamlet. So sells goods to Hamlet on credit. And that means that Hamlet there is the debtor. The owner of the business is Musa. So this amount, for example, if it is 100 kwacha, this amount is going to be shown in the sales yearbook as 100 kwacha. But in the personal account of Hamlet, it's going to be shown on the debit side, because Hamlet is receiving worthy of goods of 100, but is not paying for those goods. So that's what I mean when I say like the personal accounts in the sales ledger, they are going to be debited. Then the total credit sales in the sales account in the general ledger is going to be credited. So that's how the entries can be made in the sales yearbook and making entries in the sales ledger. Let us now look at this example that we're going to find. So let us look at this example. The example reads, this information was obtained from the books of Musa for the month of September 2023. So the first transaction occurred on the 1st of September. Sold goods to Ben amounting to 20 kwacha, sales invoice 150. On the 4th, sold goods to Robert amounting to 20 kwacha, sales invoice 152. On the 21st, sold goods to Lubunda amounting to 40 kwacha, sales invoice 155. So from this information, we are supposed to record the sales yearbook. We're also supposed to record the personal accounts. And after we record the personal accounts, we are supposed to show the sales account. Okay, so we're going to start with the formatting of the sales yearbook. So this is the formatting. So in the first column, we have date. In the second column, we have details. In the third column, we have invoice number. Then in the fourth column we have folio, and in the last column we have invoice amount. So the first thing that you're supposed to do when recording the sales day book is to put up the title. So the title, we're going to have Musa Sales Day Book for the month of September. The month of September 2023. And we have the first transaction here. It occurred on the 1st of September, and it reads sold goods to Ben amounting to 20 kwacha, sales invoice 150. So that's the first transaction. So here we can say our 2023 first transaction occurred on the 1st of September. In the details column, we are going to put the data there, which is Ben. And the amount there, it's 20 kwacha. So we're going to put the amount there, 20 kwacha. So in the sales invoice we have been told it's 150. So we'll put 150 there. Then in the folio you're going to record the ledger where it's going to. Since we're looking at the sales day book, that means that this amount has to go to the sales ledger. So you're going to write SL. Then for the second transaction, sold goods to Robert amounting to 20 kwacha, sales invoice 152. So on the 4th of September, here we're going to say Robert, our sales invoice is 152. We're going to say sales ledger 20 kwacha. The last transaction on the 21st, sold goods to Luwunda amounting to 40 kwacha, sales invoice 155. So on the 21st of September, sold goods to Luwunda, so we'll say Luwunda. The sales, the invoice number is 155. We'll say the sales ledger there, 40 kwacha. So there we are going to find the total. So we'll say 20 plus 20 plus 40, that's 80. So our answer is going to be 80. And the date there, we're going to show it at the end of the month, which is 31st of September. Then in the details there, we're going to say total credit sales. Total credit sales. And this amount has to be shown in the general ledger. So we'll put GL to show general ledger. Then the next thing, we have to post these amounts in the in the sales ledger. So we are supposed to prepare the sales ledger. And you have said that in the personal accounts, each amount is going to be debited for the debtors there. And that, I mean this way. So for example, our first data there, we have Ben. So we'll say Ben there. We're going to say debt, details, folio, our debit, our credit. And the transaction for Ben occurred on the 1st of September. So there we can say 2023, 1st of September. And in our details there, we're going to put sales. Sales there, and each amount I've said in the for the personal account is going to be debited. So we are going to debit 20 kwacha. And the reason why we are debiting 20 kwacha in the account for Ben, because Ben is receiving goods worthy 20 kwacha. And these goods were sold to Ben on credit. That means that he did not pay cash immediately. That means it's just receiving those goods. Then we'll go to the second one. We'll do the same for the account of Robert. So date, details, portfolio debit credit. And the transaction for Robert occurred on the 4th of September. So 4th of September, we'll say sales will debit that amount, 20 kwacha. Then the last one is for Lubunda, and it occurred on the 21st of September. So we'll say Lubunda 2023. That's going to be 21st of September. We'll say sales will debit that amount, which is 40 kwacha. Then when you are done putting up these transactions, that means that you need to find the total. You're also supposed to find the balance breakdown and the balance carried down. So for us to find those information, in the account of Ben there, our total there, we can record 20 on the debit side and 20 on the credit side. And we'll say balance carried down. The balance carried down is going to be shown on the credit side there as 20. Then the balance brought down is going to be shown on the debit side as 20. We'll go in the account of Robert. Our total there, we're also going to have 20, 20. Our balance carried down is going to be shown on the credit side as 20. Then the balance brought down is going to be shown on the debit side as 20. Then the account for Lubunda there, our total we're going to have 40 on the debit side and 40 on the credit side. That means that the balance carried down is going to be shown on the credit side as 40, and the balance brought down is going to be shown on the debit side as 40. And you have seen we have prepared the sales daybook and the sales ledger. So that's how you can prepare this. Where you have questions, please ask in the group. Let us now prepare the general ledger that shows the sales account. So let us now prepare the general ledger, and in the general ledger we're going to show the sales account. In the general ledger we're going to obtain it from the question that we had, or from the information that we have put up. So we have put up Musa sales daybook for the month of September 2023. We have also shown sales ledger there, and in the sales ledger we have shown the debtors account. So for us to write down the sales, the general ledger, I've written the sales account, and this sales account, they are for the company. I've already recorded the year there. The year that we're using is 2023. So in the details there, the thing that you're going to put total credit sales. So this total credit sales is going to show the amount of goods that we are sold by the business on credit. So we are going to say total credit sales, and this has to be recorded at the end of the month. And at the end of the month there is 31st. So we are going to say 31st of September. And this total credit sales, we know that it's 80 kwacha. But the question that you need to ask yourself, is it going to be on the debit side or on the credit side? So this amount has to be recorded on the credit side. Remember that the sales account, this is the account for Musa. And Musa was selling goods on credit to the debtors. That means that those amount of goods were going out of the business. That means that Musa was losing out. So we're going to record it on the credit side there. Then we can find our total. Our total there, we're going to put 8 kwacha on the debit side and 8 kwacha on the credit side. Then we can find our balance carried down there. It will be on the debit side as 8 kwacha. Then the balance brought down is going to be on the credit side as 8 kwacha. So that's how you can draw up the sales daybook. Where you have questions, please ask in the group. So this program has been brought to you by Siwale. If you want to get connected with me you can actually check out my social media platforms. I'll meet you next time, and peace and God bless. So we continue looking at the sales deal book, and today we're going to look at some examples. So we have this example: the following transactions were obtained from the books of Xavier in the month of September of 2005. So we have September 2005. So the first transaction reads: sold goods on credit to Daliso amounting to 145 kwacha, sales invoice 150. Then on the 15th, credit sales to Triza amounting to 50 kwacha, sales invoice 153. Then on the 16th, sold goods to John on credit amounting to 200 kwacha, sales invoice 155. On the 27th, sold goods to Davis on credit amounting to 250 kwacha, sales invoice 156. So you are required, Roman numeral 1, prepare a sales deal book from the above transaction and post to the personal accounts. Roman numeral 2, transfer the total of the sales account in the general ledger. So the first thing that we are going to do is to prepare the sales deal book for Xavier. So the first thing is to put up the title. So I've already written the title there. As you can see, the title reads Xavier's sales deal book for the month of September of 2005. So that's the first thing that we're going to do, and we are going to start recording the transactions. So before we record the transactions, we know that the year is 2005, so we can put up our 2005 there. Then I can put up the currency that we are using. We are using kwacha, so I can put K in the column of invoice total. So the first transaction reads sold goods on credit to Daliso amounting to 145 kwacha, sales invoice 150. So the date there, we know that's 1st of September, so we are going to show that. Then in the details there, we're going to be writing down the names of the customers. So the first customer there is Daliso, so we're going to say Daliso. Then in the invoice number column there, we know that the sales invoice have been given as 150, so we're going to say 150. Then in the folio there, we're going to write down the ledger where it's going to. So the ledger where it's going to is the sales ledger, so we're going to say SL. And the figure, we know that's 145. Then the second transaction occurred on the 15th. Credit sales to Triza amounting to 50 kwacha, sales invoice 153. So I'll say 15th of September there. So in the details column, we're going to say Triza. The invoice number is 153. Then it's going to the sales ledger there. The amount is 50 kwacha. Then on the 16th, sold goods to John on credit amounting to 200 kwacha, sales invoice 155. So say 16th of September there. Now details column will say John. The invoice number is 155. Then this is going to be shown in the sales ledger. The amount is 200 kwacha. Then on the 27th of September, sold goods to Davis on credit amounting to 250 kwacha, sales invoice 156. So we are going to say Davis there in the details column. The invoice number is 156. Then we'll say sales ledger there. Then the our total there is 250. So as you can see, the transactions are done. So we are going to find the total. So we're going to say 145 plus 50 plus 200 plus 250. Our answer there is going to be 645, and this 645 is going to be recorded at the end of the month. So we're going to say 31st of September there. Then we'll say total credit sales. So total credit sales, and this is going to be shown in the general ledger. So we're going to show the amount of 645 in the general ledger, and that shows total credit sales. So that's how you can write down the sales yearbook for the month of September for the year 2005 for Xavier. Where you have questions, please ask in the group. So we have just answered the first part, and if you look at our Roman numeral 1, it said prepare a sales yearbook from the above transactions, which we have done. But the second question reads post to the personal accounts. So we are supposed to post in the personal accounts, and we are going to do that by writing down the sales ledger. And we said in our discussions that in the sales ledger, the personal accounts, they are going to be debited. Each and every personal account for the customer is going to be debited with a certain amount. So let us show that in the sales ledger. So we have our sales ledger. So we are going to start with Daliso. So we are going to put our year there, 2005. We're going to put our currency there. So like the first transaction, if we look at the first transaction, it reads sold goods on credit to Daliso amounting to 145, sales invoice 150. And if we check in our sales yearbook, we only have the details for Daliso. It's only appearing once, so it means we're going to get our 145 as our final figure that we're going to transfer in the sales ledger. So we're going to say the date there is 1st of September. Then we'll say sales, in the account of Daliso we're going to debit it with 145. And this is the only transaction which occurred. That means that we can balance up this account, and to balance up this account, we know that we're going to find our total. So our total there is going to be 145, and there 145. So we can say our balance carried down is going to be shown on the credit side as 145. Then the balance brought down is going to be shown on the debit side as 145. Let us look at the other transaction. So the other transaction occurred on the 15th of September, and that was the transaction for Triza. So we have the account for Triza there, and since Triza had only one transaction, that means that we're going to put up the amount as 50 kwacha. This is because that's the only amount of goods that we have sold to Triza. So we're going to put up our year there, which is 2005. Put our K there, our K, and that occurred on the 15th of September. So we are going to say sales, and that amounted to 50 kwacha. And this is the only transaction which occurred, we can balance up this account. So we'll say balance carried down, and we say balance brought down. So our total there, we're going to have 50 kwacha on the debit side and 50 kwacha on the credit side. Our balance carried down is going to be shown on the credit side as 50, and the brought down is going to be shown on the debit side as 50. Let us look at another transaction. So another transaction occurred on the 16th. Sold goods to John on credit amounting to 200 kwacha, sales invoice 155. And since this is the only transaction that we had for John, that means that we only have one transaction, and we are just going to show 200 kwacha in the account for John. So let us write down that. So we're going to say the year 2005, say kwacha there, kwacha. Then the date is 16th of September. We'll say sales. Then we're going to debit the account for John with 200 kwacha. So we're going to find our total there. So our total, we're going to have 200 on the debit side and 200 on the credit side. And we're going to find our balance carried down. So we're going to have balance carried down will be shown on the credit side, then the balance brought down is going to be shown on the debit side as 200. Let us look at another transaction on the 27th. So it goes to Davis on credit amounting to 250, sales invoice 156. And since this is the only transaction that occurred for Davis, that means we only have one amount, and that amount is 250. So we're just going to show 250 in the account for Davis. So the first thing that we're going to do is to write down the year. So 2005, we're going to put our kwacha there, then we know that the date, that 27th of September. So we're going to say sales there, and you're going to debit it with 250. So we're going to find our total, we're going to find our balance carried down, we're going to find our balance brought down. So the total there is 250 on the debit side and 250 on the credit side. So the balance carried down is going to be shown on the credit side as 250 there. Then the balance brought down is going to be shown on the debit side as 250. So Loma numero 2 reads, transfer the total of the sales account in the general ledger. So as we discussed, we said that when you're making entries in the sales ledger, each and every personal account of the customer is going to be debited with that amount. But when we are showing the sales account in the general ledger, the sales account is going to be credited with the total credit sales. That means that for us to show the sales account in the general ledger, we are going to credit it with the total credit sales. So the first thing that we're going to do is to put up our year, that's 2005. Then we have kwacha there, then we have kwacha. Then we're going to say that 1st of September, total credit sales. So we have total credit sales, and that total credit sales is going to be shown on the credit side of the sales account. And the total credit sales, you can take it from the sales yearbook, and the sales yearbook, the amount that we found is 645. So we're going to show that amount. So say 645. So there we can find our total, and we can find our balance carried down and our balance brought down. So our balance carried down, also our balance brought down. So the total there, we're going to have 645 on the credit side and 645 on the debit side. So the balance carried down is going to be shown on the debit side as 645. Then the balance brought down is going to be shown on the credit side as 645. So as you can see, like in the sales account, the personal accounts were debited with the amounts that were shown in the question, And in the sales account, in the general ledger, the total credit sales is credited. So you can see that the double entry system has been made. We have made the double entry system. Where you have questions, please ask in the group. So let us look at this example. The following credit transaction took place in the firms of Barnabas during the month of February for the year 2006. So the first transaction occurred on the 60th, sold 30 bunches of banana at 140 kwacha each on credit to Midimo of sales invoice 199. Then on the 23rd, sold 6 rolls of white paper at 20 kwacha each on credit to Tasila, half the amount she paid by cash of sales invoice 200. Then on the 26th, sold 10 meters of plastic tubing at 15 kwacha per meter on credit to Toy, less 5% trade discount of sales invoice 225. On the 28th, sold 20 boxes of boom to Sakala on credit at 10 kwacha each of sales invoice 230. Sakala paid 10 kwacha of cash and the remaining balance 5% trade discount. So you are required, Roman numeral 1, to write up a sales day book for the month and post to the personal accounts. Roman numeral 2, transfer the total to the sales account in the general ledger. So the first thing that we're going to do is to prepare Barnabas sales day book for the month of February 2006. So the first transaction occurred on the 60th, sold 30 bunches of banana at 140 kwacha each on credit to Midimo of sales invoice 199. So we're going to write down the date there. So the date is 60th of February. Then the details there, we are going to write down the customer. The customer, it's Milimo, so we're going to say Milimo. And if we look at the transaction for Milimo, it reads sold 30 bunches of banana at 140 kwacha each. So we're going to say 30 bunches of banana at 140 kwacha each. So I've written 30 bunches of banana at 140 kwacha each. And we know that our invoice number it's 199. Then the folio there, we're going to say sales ledger. And for us to find the total there, we're going to say 30 multiplied by 140. So the total, we are going to have 4,200. Let's look at the second transaction. The second transaction occurred on the 23rd. Sold 6 rolls of white paper at 20 kwacha each on credit to Tasila, half the amount she paid by cash of the sales invoice 200. That means that for us to find our total, we're going to say 6 multiplied by 20, and we are going to have 120 kwacha. But before we record it in the invoice total, we have to subtract that by 60, since we have been told that half of that amount was paid by cash, and we don't record any cash transaction in the sales day book. We only record credit sales. So let us write down the date. So the date is 23rd of February there. So we are going to say Tasila. So in the details column, we're going to say 6 rolls of white paper at 20 kwacha each. So say 6 rolls of white paper at 20 kwacha each. And we know that the invoice number there, the invoice number, it's 200. Then we're going to have the sales ledger, and to find the total there, we're going to say 20 multiplied by 6, and our amount there is going to be 120. But we have been given an important note in the question. We have been told that half of that amount was paid by cash. And we know that in the sales daybook we don't record any cash transaction. That means that we need to subtract 60 kwacha from 120 kwacha. So we're going to say less cash sales. Less cash sales of 60 kwacha. So there we're going to say 120 minus 60, and we're going to have 60. Let us look at another transaction. On the 26th, sold 10 meters of plastic tubing at 15 kwacha per meter on credit to toy, less 5% trade discount of sales invoice 225. So for us to find this transaction, first of all we are going to find like the total amount, multiplying 10 meters by 15 kwacha. So we're going to say 10 multiplied by 15, and we're going to have 150 kwacha. But before we can record it in the invoice total, we have to remove the 5% trade discount. So we're going to say 5% of 150, we're going to have 7.5. That means that the total amount that we're going to record in the invoice total, we're going to say 150 minus 7.5, and we're going to have 142.5. So let us record that transaction. So the date there is on the 26th of February. There we're going to say toy. So 10 meters at 15 kwacha per meter, and we know that our invoice number there, that's 225. Then we're going to have our sales ledger there. So we're going to say 10 multiplied by 15, we're going to have 150. And we know that there is a discount there, and the trade discount that we have been given in the question is 5%. So we're going to say less 5% trade discount. So less 5% trade discount. So we're going to say 5% of 150. The answer is 7 kwacha 0.5. And for us to find the invoice total there, we're going to say 150 minus 7.5. The answer is going to be 142.5. Then on the 28th, sold 20 boxes of boom to Siwale on credit at 10 kwacha each, of sales invoice 230. Siwale paid 10 kwacha of cash and the remaining balance 5% trade discount. So the first thing that we're going to do is to find our total amount, and to find our total amount we're going to say 20 multiplied by 10 kwacha of each box there. So 20 multiplied by 10, we're going to have 200. And when we find out the total there, we have been told that Siwale paid 10 kwacha of cash, and we know that we don't record cash transaction in the sales daybook. That means that we're going to say 200 minus 10, and we're going to have 190. And we have been told that the remaining balance we have to charge 5%. So we are going to say 190 multiplied by 5%, and 5% of 190, it's 9.5. So to find the total amount that's going to go to the invoice total, we're going to say 190 minus 9.5. In the answer we're going to have 180.5. So to write down the date there, it occurred on the 28th of February. So we are going to say Siwale there, that's the customer. So I'll say 20 boxes of boom at 10 kwacha each. So 20 boxes of boom at 10 kwacha each, and we know that the invoice number is 250. Then we have the sales ledger there. So we're going to say 20 multiplied by 10, we're going to have 200. And we know that Siwale paid 10 kwacha by cash, so we're going to say less cash sales. So less cash sales of amount of 10. That means that our answer there, we're going to have 190. And we know that 190, Siwale was given trade discount of 5%. So we're going to find 5% of 190. So say less 5% trade discount. So 5% of 190 there, it's 9.5. So we are going to subtract 9.5 from 190, and our answer, we're going to have 180.5. Then as you can see, we are done writing down our transactions. So we can say at the end of the month, which is 28th of February there, we'll say total credit sales. So we're going to add 4,200 plus 60 plus 142.5 plus 180.5. The answer, we're going to have 4,583. So this is the amount that we are going to transfer to the general ledger. So it's going to be shown in the sales account in the general ledger. So the second part of the question reads, post the personal accounts. And we have actually discussed that all the personal accounts in the sales ledger, they are going to be debited. So let us show the personal accounts. So for us to write down our sales ledger, we're going to start with the account for minimum. So the information will be taken in from the sales daybook. So we're going to check the transaction in the sales daybook that involve minimum. And as you can see, we only have one transaction that occurred on the 6th of February. So we're going to write that date. So we're going to say 2006. We're going to put our K there. We're going to put our K. Since we only have one transaction, and that transaction occurred on the 6th of February, we're going to say sales. And the amount is 4,200. So we're going to have balance carried down, and we're going to have balance brought down. Then we're going to say total there. So our total, we're going to have 200 on the debit side, 200 on the credit side. Balance carried down is going to be shown on the credit side. Balance brought down is going to be shown on the debit side. Let us now look at the transaction for Siwale. So the transaction for Siwale only appears once in the sales daybook. That means that we're only going to show one figure. So we'll say 2005. We have kwacha there. We have kwacha. That transaction occurred on the 23rd of February. So we're going to say sales, and we're going to debit it with 60 kwacha. We'll say our balance carried down, balance brought down. Then we have our total there. So our total, we're going to have 60 there on the debit side and 60 on the credit side. Balance carried down is going to be shown on the credit side as 60. Balance brought down is going to be shown on the debit side as 60. Let us look at the other customer. The other customer that we have, it's Toy. So if we look at the transaction for Toy in the sales daybook, it only appears once. That means that we're going to only show one transaction. And to do that, we're going to write down our year to 2006. So our year is 2006. Take note that the year in Siwale there is 2006. So we have our kwacha there. We have our kwacha. Then this transaction occurred on the 26th of February. So we're going to say sales, and we're going to debit it with that amount. So the amount that is showing in the sales daybook, that's the amount that you put in the personal accounts, and the amount we have 142.5.
we're going to find our balance credit down, balance brought down, and our total. So to find our total there, we're going to say 142.5 on the debit side and 142.5 on the credit side. The balance credit down is going to be shown on the credit side as 142.5 and 142.5 on the debit side as balance brought down. Let us look at the transaction for Siwale. And for the transaction for Siwale, we only have one transaction in the sales daybook. That means that we're only going to record one transaction. So the year is 2006. We're going to put our kwacha there. I'm going to put our kwacha. And the transaction occurred on the 28th of February. So we're going to say sales, and we're going to debit it with the amount that is showing in the sales daybook, and the amount that's showing in the sales daybook is 180.5. So we'll say 180.5. So we're going to find our balance credit down, balance brought down, and our total. So we'll say balance carried down. We have our total there. We have the balance brought down. So the total there, we're going to have 180.5 on the debit side and 180.5 on the credit side. To find that the balance carried down, it's going to be shown on the credit side as 180.5 on the credit side there. Then the balance brought down is going to be shown on the debit side as 180.5. So as you can see, we are done writing down the personal accounts of customers in the sales ledger. Let us look at number numero 2. Number numero 2 reads, transfer the total of the sales account in the general ledger. So to answer that second part of the question, we have to identify total credit sales in the sales daybook. And the total credit sales appear on the 28th of February in the sales daybook, and that amounted to 4,583. That means that when we write down the sales account in the general ledger, in our details column we are going to say total credit sales, and that amount is going to be placed on the credit side of the sales account. So to answer that question, we're going to say the year there is 2006, and we're going to put our kwacha there, and we're going to put our kwacha, and that appeared on the 28th of February in the sales daybook. So say 28th of February in the sales daybook, and in the details column we're going to say total credit sales. So total credit sales, and that amount is going to be shown on the credit side of the sales account. So we're going to say 4,583. So we're going to find our balance carried down, our total and balance brought down. So say balance carried down, total, balance brought down. So the total there, we're going to have 4,583 on the debit side, and we're going to have 4,583 on the credit side. So to find our balance credit down, it's going to be 4,583 on the debit side, and to find our balance credit down, we're going to have 4,583 on the credit side. So that's how you can write down the sales account in the general ledger, and that's how you can write down the sales daybook, and that's how you can actually post the personal accounts in the sales ledger. Where you have questions, please ask in the group. Thank you. I'm meeting next time. So this program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless. Let us now look at the purchases daybook and the purchases ledger. The purchases daybook is a book of original entry used for recording credit
purchases. It is a book where we record goods bought by the business from its suppliers on credit. Whenever the business purchases the goods on credit, it is not given a receipt since it does not give in immediate cash but promises to pay later. Instead, it is given a purchases invoice by the supplier of the goods. The information recorded in the purchases journal is therefore obtained from the purchases invoice. In the purchases journal, names of creditors or suppliers and the money value of the credit supplier or goods supplied to the business on credit are recorded in order of dates when they were purchased. Let us now look at making entries in the purchases daybook and in the purchases ledger. All credit purchases are recorded in order of dates in the purchases daybook. After all the credit purchases have been recorded, the amounts are totaled and this shows the total credit purchases for the period. The personal accounts of suppliers in the purchases ledger are credited with the amounts of purchases. The total credit purchases is debited to the purchases account in the general ledger, thus completing the double entry. If posting is done accurately, the sum of the individual amounts to the individual suppliers account in the ledger should agree with the amount of credit purchases in the purchases ledger. Let us now look at the formatting of the purchases daybook. So the formatting of the purchases daybook can be written in two ways. In one way, the formatting of the purchases daybook can only have the total invoice, and in the other format it can include both the amount column and the total invoice. The formatting that has only the total invoice is written when the business did not receive trade discount for that trading period. The formatting that has both the total invoice and the amount column is used when the business had received trade discount during that trading period. So we have that formatting. So the first formatting, we have title of the purchases daybook, then we have date details, invoice number, folio, and invoice total. So I already explained what this information means. The only difference there in the folio column there, that means that we need to include the purchases ledger. So we're going to have our PL. Then for the second formatting, we have title of the purchases daybook, then we have date details, invoice number, folio, amount, and invoice total. So today in accounts, we'll be looking at the purchases daybook. So we have this example that we're going to use, and the example reads: the following transactions were obtained from the books of Madame Mwashi in the month of March 2008. So we have March 2008. So on the 1st of March, credit purchases from Raban amounting to 150 kwacha, purchases invoice number 001. Then on the 2nd of March, purchases invoice number of 008, bought goods on credit from Christopher amounting to 34 kwacha. Then on the 20th of March, purchases invoice number of 010, goods purchased on credit amounting to 500 kwacha from Cabo. On the 27th of March, bought goods on credit from Lazarus amounting to 230 kwacha, purchases invoice number of 017. So you are required A, to prepare a purchases daybook from the following transactions and post the personal accounts. Then B, transfer the total to the purchases account in the general ledger. So we are going to start by preparing the purchases daybook. And for us to prepare the purchases daybook, you know that the first thing that we must do is to write down the title. So I've already written the title, and the title is going to read Madame Mwashi Purchases Daybook for the month of March 2008. So that's the first thing that we're going to do. And we know that the year that we are using is 2008. So we're going to write down our 2008. Then we also know that the currency that we are using is kwacha. So in the invoice total there, we're going to put our K. And we're going to start with the first transaction. And the first transaction occurred on the 1st of March. Credit purchases from rubber amounting to 150 kwacha purchases invoice number of 001. So we are going to say first match there, our first match. So we are going to say Laban, and Laban there we know that the invoice number was 001. Then in the folio there we are going to say PL, which represents the purchases ledger. So we have to record that in the purchases ledger. Then the amount was 150 kwacha. Let us look at the second transaction. We have our second transaction there, and it reads purchases invoice number of 008, bought goods on credit from Christopher amounting to 34 kwacha. So we are going to say on the 2nd of March there, in our details column we are going to say Christopher. So we have Christopher there, and the invoice number is 008. In our folio we are going to say PL. The amount there is 34 kwacha, so we are going to say 34. Then on the 20th of March, purchases invoice number of 010, goods purchased on credit amounting to 500 kwacha from Gabo. So on the 20th of March, so we'll say 20th of March, we'll say Gabo. Then the invoice number there is 010. We'll say our PL there, the amount is 500 kwacha. Then our last transaction occurred on the 27th of March, bought goods on credit from Lazarus amounting to 230 kwacha, purchases invoice number of 017. So we are going to say, so we'll say on the 27th of March there, we'll say Lazarus in our details column. Then the invoice number, we know that's 017. Then we'll say our PL there, and the amount is 230. So there we can find the total credit purchases. So we can say our total credit purchases, and this is shown at the end of the month. So we'll say 31st of March, and that is recorded in the general ledger. So we'll say GL there, and to find the total credit purchases we're going to add our figures. So we'll say 150 plus 34 plus 500 kwacha plus 230 kwacha. So the answer that we are having is 914. So that's our answer. So that's how you can write down these purchases day book. Where you have questions, please ask. So question A reads, to prepare a purchases day book from the following transactions. So we have already done that, and post to the personal accounts. So we are supposed to post to the personal accounts, and we do that by writing down the purchases ledger. And we know that when posting to the personal accounts of suppliers, we are going to be crediting each and every supplier. So that's the most important thing that you must take note. So we're going to start with Laban, and we know that our year that's 2008. Then we know that we have kwacha there, we also have kwacha. So each and every information we're going to be taking it from the purchases day book. You can see that our first transaction that we have that occurred on the 1st of March, and the supplier that was involved is Rabban there. So we are going to say on the 1st of March there, we'll say purchases, and that amount is going to be credited. So we're going to credit 150. So credit 150. So we'll go to the second transaction, and the second transaction occurred on the 2nd of March, and the supplier there is Christopher. So I've already written down the account for Christopher, and the amount that is involved is 34 kwacha. So let us record 34 kwacha as purchases. So say 2008, we have our kwacha there, we have our kwacha. The transaction occurred on the 2nd of March, so say purchases, and that involved 34 kwacha. Let us go to the next transaction. So the next transaction occurred on the 20th of March, and the supplier there was Gabo, and the amount that was involved was 500 kwacha. So let us record our 500 kwacha. So there we can say 2008 kwacha there, kwacha that occurred on the 20th of March. So say purchases. So credit purchases with 500. Let us look at the next transaction. So the next transaction occurred on the 27th of March, and the supplier was Lazarus, and the amount that was involved was 230. So let us record that. So say 2008, say kwacha there, say kwacha, then that occurred on the 27th, and let us look at the figure or the amount. So the amount that we are having is 230. So say 230. So we can go back to our purchases day book, and we have to check if we have recorded each and every transaction. So as you can see, we have recorded each and every transaction. That means that the next thing that we're supposed to do is to balance up each account. So we are going to start with the account for Laban, and to balance up that account, we have to find our balance carried down. We also supposed to find our balance brought down. We're also supposed to find our total. So to find the total there, that means that we're going to record 150 on the debit side and 150 on the credit side. And our balance carried down is going to be shown on the debit side there as 150. So the balance brought down is going to be shown on the credit side as 150. We can go to the next account. So the next account is for Christopher. So for Christopher, we'll do the same. We're supposed to find the balance carried down, supposed to find the balance brought down, supposed to find the total. So our total there that we're going to show on the debit side, on the credit side, will be 34. So we have 34 there. The balance carried down is going to be shown on the debit side as 34. Then the balance brought down is going to be shown on the credit side as 34. Then let us look at the next account. So the next account that we are having is that for Gabu. So for Gabu, again, we're going to find our balance carried down, we'll find our balance brought down, then we'll find our total. So our total there, it's 500 on the debit side and 500 on the credit side. So to find the balance carried down, our balance carried down is going to be shown on the debit side as 500, and the balance brought down is going to be shown on the credit side as 500. Then we're going to balance up the account for Lazarus. So the account for Lazarus there, we're going to find our total, we're going to find our balance carried down, we're going to find our balance brought down. So our total there, we're going to show 230 on the debit side and 230 on the credit side. Our balance carried down is going to be shown on the debit side as 230, and the balance brought down is going to be shown on the credit side as 230. So that's how you can write down the personal accounts in the purchases ledger. Where you have questions, please ask. So let us look at the next part of the question. So our question B reads, transfer the total to the purchases account in the general ledger. And we know that the principle when recording in the purchases ledger is that for each and every personal account for the supplier, we are going to credit that account.
Then in the purchases account in the general ledger, we are going to debit the total credit purchases, and that means that the double entry system is going to be made. So the simple thing that we can say when recording in the purchases account in the general ledger is that you're going to debit the total credit purchases. So we are supposed to record our total credit purchases in the purchases account, and we know that that figure can be found in the purchases daybook. So make sure that everything that you have found in the purchases daybook is correct, and that is going to signify, or that's going to imply, that everything that's going to follow is also going to be correct. So we know that our total credit purchases is 914. So let us record that. So we have our general ledger there, then we have the purchases account, and we know that the year is 2008. The currency that we are using is Zambian kwacha, so we'll put our case there. And we know that total credit purchases is recorded at the end of the month, so we'll say 31st of March, and in our details column we're going to say total credit purchases. So we'll say total credit purchases, and our total credit purchases is 914. So there we can find our balance carried down, we can find our total, and we can find our balance brought down. So the total there, we're going to have 914 on the debit side and 914 on the credit side. Then the balance carried down is going to be shown on the credit side there as 914. Then the balance brought down is going to be shown on the debit side as 914. So that's how you can answer that question on the purchases daybook. Where you have questions, please ask in the group. So let us look at this example. Agnes had the following transaction in her business in the month of October for the year 2009. So we have October. So the first transaction occurred on the 18th. Purchased 5 cases of plastics at 50 kwacha each on credit from Elijah, less 5% trade discount of purchases invoice of 444. Then on the 15th, purchased 200 kg of sugar at 500 kwacha per 50 kg on credit from Savior, less 25% trade discount of purchases invoice of 495. Then on the 19th, purchased 20 pins on credit from Kenny at 5 kwacha each of purchases invoice 500. Then on the 22nd, purchased 5 rolls of white paper from Moses of purchases invoice of 505 at 10 kwacha each. Then on the 27th, purchased 15 boxes of tea bags from Davis at 15 kwacha each of purchases invoice of 550. Agnes paid 50 kwacha of cash and the remaining balance 20% trade discount. Then on the 30th, purchased 25 cases of sweets at 8 kwacha each on credit from Ignatius, half the amount she paid by cash of purchases invoice of 590. So you are required to prepare the purchases daybook and post to the personal accounts in the purchases ledger. Then B, transfer the total to the purchases account in the general ledger. So we are going to start with A, and for us to prepare the purchases daybook, we know that the first thing that we must do is to write down the title. So we are going to have the title, and it's going to read Agnes Purchases Daybook for the month of October for the year 2009. So that's the first thing that we are going to do. And since we have done that, we can write down our year there. We know that the year is 2009. Then we can put our kwacha there to just signify the currency that we are having in the question. So we'll start with the first transaction, and the first transaction occurred on the 80th. So the first transaction reads, so our first transaction occurred on the 80th. Purchased 5 cases of plastics at 50 kwacha each on credit from Elijah, less 5% trade discount of purchases invoice of 444. So our first thing that we're going to do is to write down the date that occurred on the 80th of October there. So in our details, we know that the supplier was Elijah. So we are supposed to write down Elijah. So we'll say Elijah there. Then we'll say 5 cases of plastics at 50 kwacha each. So we're going to say 5 cases of plastics at 50 kwacha each. And we know that the invoice number there, the invoice number we are having 445. Then in our folio there, we're going to say our PL, and to find our amount there, our amount that we are having, we're going to say 5 cases there multiplied by 50 kwacha. So 5 multiplied by 50, we're going to have 250, and we know that there is a trade discount of 5%. So we are going to say less 5% trade discount. So less 5% trade discount. So we're going to say 5% of 250, and our answer is 12.5. So to find the invoice total there, we're going to say 250 minus 12.5. Our answer is going to be 237.5. So that's how you can record the first transaction. Let us look at the next transaction. So the next transaction occurred on the 15th. Purchased 200 kg of sugar at 500 kwacha per 50 kg on credit from Xavier, less 25% trade discount of sales invoice of 495. So for us to find the total amount that's going to cost for 200 kg, we can say 200 divided by 50, and we know that our answer that we are having, that's 4. So we can say 4 multiplied by the 500 kwacha. That means that we're going to have 2000 kwacha. So that's how we are going to find our amount there. So let us record that in the purchases day book. So that occurred on the 15th of October. So we can say the supplier there is Xavier. Then to put up the description, we can say 200 kg of sugar at 500 kwacha per 50 kg. So to find the amount there, we can say 200 divided by 50, and we know that's 4. So we'll say 4 multiplied by our 500 kwacha. That means that the amount that we're going to have is 2000, and we know that the invoice number, that's 495. So we have 495. Then we're going to see our PL there. Then we know that there was a 25% trade discount, so we're going to say less 25% trade discount. So say 25% of 2000 kwacha, and our answer is 500 kwacha. So we'll say 2000 minus 500. The answer is 15.
or 1,500. Let us look at the next transaction. So the next transaction occurred on the 19th, purchased 20 pens on credit from Kenny at 5 kwacha each of purchases invoice of 500. So let us record that. So we know that that's on the 19th of October. So we're going to write down the name of the supplier, and we know that Kenny. So to write down the description, we can say 20 pens at 5 kwacha each. So say 20 pens at 5 kwacha each. So to find the amount there, I'm going to say 20 multiplied by 5, and the answer that I'm having is 100. Since there is no entry discount, that 100 is going to come direct here. Then we know that the invoice number there, that's 500, so we're going to say 500. Then there we're going to have PL. Let us look at the next transaction. So the next transaction occurred on the 22nd of October. Purchased 5 rolls of white paper from Moses of purchases invoice of 505 at 10 kwacha each. So let us record that transaction. So to record that transaction, we're going to say 22nd of October, and we're going to write down the name of the supplier, that's Moses, and our description there, we can say 5 rolls of white paper at 10 kwacha each. So the description there is going to read 5 rolls of white paper at 10 kwacha each, and since we did not have any trade discount, that means that we're going to record that amount direct here. So we're going to say 5 multiplied by 10, we're going to have 50, and we know that the invoice number is 505. Then we're going to say our PL. Then on the 27th, purchased 15 boxes of tea bags from Davis at 15 kwacha each of purchases invoice of 550. Agnes paid 50 kwacha of cash and the remaining balance 20% trade discount. So for us to answer this question, the first thing that we're going to do, we're going to say 15 multiplied by 15 so that we can find the amount there. So 15 multiplied by 15, the answer we're going to have 225, and we know that there was cash sales of 50 kwacha. That means that we're supposed to subtract 50 kwacha from 225, and the answer that we're going to have is 175, and we have been told that the remaining amount, which is 175, we have to charge a 20% trade discount. So we're going to say 20% of 175, and our answer is going to be 35. That means we also need to subtract the 35 kwacha from 175 kwacha. So the amount that we're going to record there as our final amount is going to be 140. So let us record that. So that occurred on the 27th of October. So the first thing that we're going to do is to write down the name of the supplier. So we know that's Davis. So to write down the description, we're going to say 15 boxes of tea bags at 15 kwacha each. So say 15 boxes of tea bags at 15 kwacha each. And to find the amount there, we're going to say 15 multiplied by 15, and we're going to have 225. And we know that the invoice number there it's 550, and there we're going to see our PL. And you have been told that Agnes had to pay 50 kwacha as cash purchases. So we can see from the question there, purchase 15 boxes of tea bags from Davis at 15 kwacha each of purchases invoice of 550. Agnes paid 50 kwacha of cash and the remaining balance 20%
trade discount. So there we can say that less cash purchases and cash purchases of 50 kwacha, and the answer that I'm having is 175. So the question proceeds. So the question says Agnes paid 50 kwacha of cash and the remaining balance 20% trade discount. So we have to charge 20% of 175. So we're going to say less 20% trade discount. So 20% of 175, we're having 35 kwacha. So there, to find the total amount, we're going to say 175 minus 35 kwacha, and we're having 140. So we're going to have 140 there. Let us look at the next transaction. So the next transaction occurred on the 30th, and it reads: purchased 25 cases of sweets at 8 kwacha each on credit from Ignatius, half the amount she paid by cash of purchases, invoice of 590. So for us to find this type of a transaction, first of all, we're supposed to find our amount, and to find our amount, we're going to say 25 multiplied by 8, and our answer, we're going to have 200. And we have been told that Agnes had to pay half of that amount by cash, so we have to subtract that amount, and we know that the half amount of 200 kwacha, it's 100. So we're going to say 200 minus 100, and that means that we are supposed to record our 100 in the invoice total column. So let us do that. So the first thing that we're going to do is to write down the date. So our date there, we know that's on the 30th of October, and we're supposed to write down the name of the supplier. The supplier is Ignatius. So the supplier there is Ignatius. In the description, we're going to say 25 cases of sweets at 8 kwacha per case. So we know that our invoice number, that's 590. So we're going to say our PL there. So we're going to say 25 multiplied by 8, and we know we are having a 200 kwacha, and we have been told that half of that amount was paid by cash, so we can say less cash purchases, and that amounted to 100 kwacha. So to find the amount that we're going to record there, we're going to say 200 minus 100, and we're having 100. Let us look at the question if we have more transactions. So we don't have more transactions. That means that we are done recording our transactions in the purchases daybook. The remaining thing that we're supposed to do is to find our total credit purchases. So for us to find the total credit purchases, we're going to add our figures. So we're going to say 237.5 plus 1500 plus 100 plus 50 plus 140 plus 100. The answer that we're going to have 2127.5. so that's going to be our answer, and we can say that's going to be total credit purchases. Our date is going to be shown on the 31st of October, and we're going to put our general ledger there. So that's how you can draw up the purchases daybook for Agnes. Where you have questions, please ask. Let us look at the second part of question A. So the second part reads: post the personal accounts in the purchases ledger. So for us to record in the purchases ledger, we have to write down the names of the suppliers. So the information we'll be getting it in the purchases daybook. So the first supplier there, we have Elijah, and Elijah, as we can see, the transaction occurred on the 18th of October, and if we check in the purchases daybook, we don't have another transaction apart from that which occurred on the 80th, and the amount that we're having is 237.5. so let us record that. So the year is 2009. so we have our kwacha there and we have our kwacha. So we're going to say on the 80th of October. In the details there, we're going to say purchases, and we know that in the purchases ledger, each personal account of the supplier is supposed to be credited. So we are going to say 237.5, and since this is the only transaction that occurred, we can find our total there, so we can balance it up. So we can find our balance carried down and our balance brought down. So to find the total there, we're going to have 237.5 on the debit side and 237.5 on the credit side. The balance carried down is going to be shown on the debit side as 237.5 on the debit side, and the balance brought down is going to be shown on the credit side as 237.5. Let us look at the next information that we have in the purchases day book. So the next supplier that we are having is Xavier, and this is the only transaction that we had recorded in the purchases day book. So the amount that we are having is 1,500. so let us show that amount. 2009, we have our kwacha there, we have our kwacha. So the date is 15th of October. So say purchases, so we're going to credit purchases by 1,500, and since this is the only transaction that we had, we can find our balance carried down, we can find our total, and we can find our balance brought down. So our total there is going to be 1,500 on the debit side and 1,500 on the credit side. Our balance carried down is going to be on the debit side as 1,500, and the balance brought down is going to be on the credit side as 1,500. Let us look at the next transaction. So the next transaction occurred on the 19th of October, and the supplier is Kenny. And since that is the only transaction for Kenny, that means that we only have one transaction for Kenny, and the amount there is 100 kwacha. So let us record that. So put our kwacha there. Kwacha, the year is 2009. The date there is 19th of October. We say purchases, and the amount there is 100 kwacha. And since we only had one transaction for Kenny, that means that we can balance up this account. So the total there, we're going to have 100 on the debit side and 100 on the credit side. The balance carried down there is going to be shown on the debit side as 100, and the balance brought down is going to be shown on the credit side as 100. Let us look at the next transaction. So the next transaction occurred on the 22nd of October, and the supplier was Moses, and we only have one transaction for Moses, and the amount there is 50 kwacha. So let us record that. So the year there is 2009. We'll say kwacha. The date is 22nd of October. We'll say purchases. The amount there we have seen it's 50 kwacha. So we can find our balance carried down, balance brought down, and our total. So our total there, we're going to have 50 kwacha on the debit side and 50 kwacha on the credit side. The balance carried down is going to be shown on the debit side as 50 kwacha. The balance breakdown is going to be shown on the credit side as 50 kwacha. Let us look at the next transaction. So the next supplier that we are having is Davis, and the amount there, as you can see, it's 140. And since we only had one transaction for Davis, that means that we can balance up that account. So you can see our 2009, our kwacha there, our kwacha, and we know that the date is 27th of October. In our details, we're going to say purchases. The amount, we know that's 140. So we can find our balance carried down, we can find our total, we can find our balance brought down. So we're going to have 140 on the debit side and 140 on the credit side. Then the balance carried down there is going to be shown on the debit side as 140. The balance brought down is going to be shown on the credit side as 140. So let us look at the other transaction. So the other transaction involved Ignatius, and the amount that we're having is 100 kwacha, and it occurred on the 30th of October. So let us record that transaction. So we have 2009, we have kwacha there, we have kwacha, then the date 30th of October. So we can see our purchases, the amount is 100 kwacha. So we can find our total there, we can find our balance carried down, we can find our balance brought down. So the total there, we're going to have 100 on the debit side and 100 on the credit side. The balance carried down is going to be shown on the debit side as 100, and the balance brought down is going to be shown on the credit side as 100. Let us look at question B. Question B reads, transfer the total to the purchases account in the general ledger. So before we can write down the purchases account in the general ledger, let us identify the total credit purchases. So our total credit purchases that we had recorded in the purchases book, it's 2,127.5. so we know that we have to record that in the purchases account in the general ledger. So let us do that. So we can say the year there is 2009, we have our kwacha there, we have our kwacha. So we're going to record our total credit purchases, total credit purchases, that will be recorded at the end of the month, that is the 1st of October, and we have to debit that amount. So we know that's 2,127.5. so we can find the balance carried down, we can find our total, we can find the balance brought down. So there, our total there, which means that we're going to have 2,127.5 on the debit side, 2,127.5 on the credit side. Our balance carried down there is going to be shown on the credit side as 2,127.5 on the credit side, and the balance brought down is going to be shown as 2,127.5 on the debit side. That's how you can find the purchases book. Where you have questions, please ask in the group. Thank you. So this program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless. So returns inwards daybook or sales returns daybook. The returns inwards daybook is a book of original entry in which the value of goods returned to the business by customers are recorded in order of dates. In this book, the name of each debtor who returned goods is recorded, and the value of goods returns in order of date when the goods were returned. The goods can be returned by the customer to the seller if the goods that were bought were damaged, if the goods that were sent to the customer were not matching to his or her expectations, goods delivered in excess of what the customer ordered for, or goods being different from what the customer ordered, among other reasons. If the customer returns goods that were previously sold to him or her to the seller gives the customer the document called the credit note that reduces the amount of money he or she is supposed to pay the seller. The customer is given the original credit note, and the carbon copies or duplicate remains with the seller's business books. It is these carbon copies of the credit note where the seller obtains information that is recorded in the sales returns daybook. So as you can see from the diagram there, it's an example of the credit note. Let us now look at making entries in the returns inwards daybook and the sales ledger. All sales returns or returns inwards are recorded in the returns inwards daybook in order of dates. After all the sales returns have been recorded, the amounts are totaled, and this shows the total credit returns for the period. The personal accounts of the customers in the sales ledger are credited with the amount of returns inwards. The total credit returns is debited to the returns inwards account in the general ledger, thus completing the double entry. If the posting is done accurately, the sum of individuals' amounts in the ledger should agree with the amount of credit returns inwards in the returns inwards account. So now let us look at the returns inwards daybook. So we have this example. The example reads, record the following transactions that were obtained from the books of Trade Kings Limited during the month of November 2011 into the returns inwards daybook and post the personal accounts in the sales ledger and transfer the total to the general ledger. So we have the month of November. We have 1st November goods goods returned to Trade Kings worthy 35 kwacha from Brian, credit note number 200. Then on the 7th of November, returns inwards from Alan worthy 20 kwacha, credit note 220. Then on the 19th of November, Chewe returned 4 boxes of boom worthy 20 kwacha each, credit note number 250 less 10% trade discount. So for us to draw up the returns inwards daybook for Trade Kings, the first thing that we're supposed to do is to put up the title. So I've already written the title, and the title reads Trade Kings Limited returns inwards daybook for the month of November 2011. So we'll start with the first transaction. The first transaction reads goods returned to Trade Kings worthy 35 kwacha from Brian, credit note number 200. So that transaction occurred on the 1st of November. So say 1st of November, and we know that our customer is Brian, so we'll say Brian in the details column. In the invoice number is 200, so we're going to write down 200. Then the folio there, we're going to say SL. The amount, we know that's 35 kwacha. Then on the 7th of November, returns inwards from Alan worthy 20 kwacha, credit note 220. So say 7th of November, then I'll say Alan. The invoice number for Alan is 220, and we know that's going to be SL there. The amount is 20 kwacha. On the 19th of November, Chewe returned 4 boxes of boom worthy 20 kwacha each, credit number 250 less 10% trade discount. So we're going to say on the 19th of November. So say on the 19th of November, we're going to say Chewe. So we know that the invoice number is 250. Then here we're going to record SL. And the question reads Chewe returned 4 boxes of boom worthy 20 kwacha each. So we're going to say 4 multiplied by 20. The answer that we are having is 80 kwacha. And we've been told that less 10% trade discount. So we are going to say less 10% trade discount. So say 10% of 80 kwacha, the answer is 8. And to say 80 minus 8, the answer is 72. So we are done recording our transactions. So the next thing that you are supposed to do is to find the total returns inwards. So we'll say total return inwards, and this is recorded at the end of the month. So we'll say 31st of November. So we'll say 35 plus 20 plus 72, and the answer is going to be 127. So we're going to have 127 as the total returns inwards. So the next thing that you're supposed to do is to post the personal accounts in the
sales ledger. And we know that the personal accounts of customers in the sales ledger are credited with the amount of returns inwards. Then the total credit returns is debited to the returns inwards account in the general ledger, thus completing the double entry. So let us record the information that we have in the returns inwards daybook. So our first customer there, we have Brian. So we're going to say 1st of November there. Then in the details we're going to say sales returns. And since we only have one transaction for Brian, that means that we can balance up this account. So sales returns, and it's going to be recorded on the credit side. As you can see, we have a 35 kwacha there, so we're going to say 35 kwacha. So here we're going to find the balance carried down, balance brought down in the total. So I'll say the balance carried down, and we're going to have the total and the balance brought down. So to find the total there, we're going to have 35 kwacha on the debit side and 35 kwacha on the credit side. Then the balance carried down is going to have 35 kwacha on the debit side, and the balance brought down is going to be shown on the credit side as 35 kwacha. Let us look at the next transaction. So the next transaction involved the customer named Alan. So we're going to write down the account for Alan there. Then as you can see, we only had one transaction for that customer, and that amounted to 20 kwacha. So we're going to say on the 7th of November there, we'll say sales returns, and we're going to credit it with 20. So since we only have one transaction there, that means that we can balance up this account. So we'll say balance carried down, and we have total there, balance brought down. The total is going to, we're going to have 20 on the debit side and 20 on the credit side. The balance carried down is going to be shown on the debit side as 20, and the balance brought down is going to be shown on the credit side as 20. Then the next customer that we can see in the returns inwards daybook, we have Chewe there. So let us record that account. And if we check in the returns inwards daybook, Chewe, the date there we have 19th of November, and the amount is 72. So we're going to record 72 in the account for Chewe. So the date there, we know that's 19th of November. So say sales returns, and we can check that figure. In that figure we have 72. So say our 72 there, then we can find our balance carried down, you can find the total there and the balance brought down. So we're going to have 72 on the debit side and 72 on the credit side. The balance carried down there is going to be shown on the debit side as 72. The balance brought down is going to be shown on the credit side as 72. So this is how you can record the personal accounts in the sales ledger. When you have questions, please ask in the group. Then let us look at the last part of the question. So the last part of the question just tells us to show the returns inwards account in the general ledger. And to answer this question, the first thing that we're going to do is to write down the year. So the year is 2011, and we're using kwacha. So there we can find the total sales returns, and the total sales returns we can get them from the returns inwards daybook. So here we have total returns inwards
that amounted to 127. So we have to record that. So say at the end of the month, which is 31st of November, we'll say total sales returns, and that amount is going to be debited when we're going to say 127. So we can find our balance, carry it down, you can find the total there, and you can find the balance brought down. Our total there, we're going to have 127 on the debit side and 127 on the credit side. The balance carried down is going to be shown on the credit side as 127, and the balance brought down is going to be shown on the debit side as 127. So that's how you can prepare the returns inwards daybook. We have questions, please ask in the group. Let us now look at the returns outwards daybook, or the purchases returns daybook. The returns outwards daybook is a book of original entry in which the values of goods returned or taken back by the business to the suppliers are recorded in order of debts. In this book, the name of each creditor or seller to whom goods have been returned is recorded, and the value of goods returned in order of debts when returns have been made. The businessman or woman may sometimes return goods that they had already bought to the supplier for the same reasons already identified under the returns inwards daybook. When the businessman or woman takes back goods to his or her supplier, the amount of money he or she was to pay is reduced by removing the value of goods returned. A document called a credit note is given to the businessman or woman by the supplier for this purpose. The information recorded in the returns outwards daybook is taken from the original credit note that is received from the suppliers to whom goods have been returned. Let us now look at making entries in the returns outwards daybook and the purchases ledger. All returns outwards are recorded in the returns outwards daybook in order of debts. After all the returns outwards have been recorded, the amounts are totaled, and this shows the total credit returns outwards for the period. The personal accounts of the suppliers in the purchases ledger are debited with the amount of returns outwards. The total credit returns outwards is credited to the returns outwards account in the general ledger, thus completing the double entry. If posting is done accurately, the sum of the individual amounts to the individual suppliers account in the ledger should agree with the amount of credit returns outwards in the returns outwards account. Let us now look at the returns outwards daybook. So we have this example, and the example reads: record the following transaction of Angojo Limited in the returns outwards daybook and post to the personal account, and transfer the total to the general ledger for the month of April 2012. So we have the month of April there. So we have 2nd April, purchases returns with the 145 kwacha to Conley, credit note number 890. Then on the 10th of April, goods of worthy 56 kwacha were returns to Kondwe, credit note number 900. On the 26th of April, credit note number of 911 for 234.5 kwacha was received for returning damaged goods to Alex. So the first thing that we're going to do is to put up the title, and the title is going to read Angojo Limited returns outward daybook for the month of November 2011. So we're going to start with the first transaction. The first transaction occurred on the 2nd of April. Purchases returns with the 145 kwacha to Conley, credit note number 890. So we're going to say 2nd of April. In there we're going to say Conley. The invoice number there, the invoice number is 890, and there we're going to say our purchases ledger. The amount is 145. Then on the 10th of April, goods of worthy 56 kwacha were returned to Kondwe, credit note number 900. So we'll say 10th of April. There we're going to say Kondwe. Invoice number, that's 900. There we're going to say purchases ledger. The amount is 56. Then on the 26th, credit note number of 911 for 234.5 kwacha was received for returning damages goods to Alex. So we can say 26th of April, we'll say Alex. The invoice number there, that's 911. Then we'll say our purchases ledger. The amount there is 234.5. Then since we are done recording our transactions, we can say 31st of April, and that is going to show total credit retains outwards. So you say total credit retain outwards, and that's going to be shown in the general ledger. So there, to find the total credit retains outwards, we're going to say 145 plus 56 plus 234.5. Our answer is going to be 435.5. Let us now show the personal accounts in the purchases ledger. So we know that the personal accounts of suppliers in the purchases ledger are debited with the amount of retains outwards. The total credit retains outwards is credited to the retains outwards account in the general ledger, thus completing the double entry. So let us do that. So as you can see, we're going to start with the first transaction. In the first transaction, again, get it from the retains outwards daybook that occurred on the 2nd of April, and the supplier there, it's Conley. So I've written the account of that supplier, so we can say that's on 2nd of April. We're going to say purchases retains, and there we're going to put it on the debit side as 145. And since we only had that transaction for that supplier, that means that we can balance up this account. So we can see our balance carried down, total balance brought down. So we can say the total there is going to be shown as 145 on the debit side, is 145 on the credit side. Then the balance carried down is going to be shown on the credit side as 145. The balance brought down is going to be shown on the debit side as 145. Let us look at the next transaction. So the next transaction occurred on the 10th, and that involved Kondwe. So I've already written the account for Kondwe there. So we can say 10th of April there, we're going to say purchases retains. So purchases retains there. So we're going to debit it with the amount that is showing in the retains outwards table, and that's 56. So we'll say 56. And since we only had one type of transaction that was involving Kondi, that means that we can balance up this account. So we can say balance carried down, the total there, balance brought down. So that's going to be 56 on the debit side, 56 on the credit side. So the balance carried down is going to be shown on the credit side there as 56. Then the balance brought down is going to be shown on the debit side as 56. Then the other transaction there occurred on the 26th of April, and that involved Alex. The amount there is 234.5. So let us record that. So we're going to say 26th of April, and we'll say purchases retains. and we are going to debit it with 234.5. So since we only had that type of transaction, we can find the balance carried down, then we can find the total, we can find the balance brought down. So to find the total there, we're going to have 234.5 on the debit side, 234.5 on the credit side. The balance carried down is going to be shown on the credit side as 234.5. Then the balance breakdown is going to be shown on the debit side as 234.5. So let us now show the retains outwards account in the general ledger. And for us to do that, we have to identify the total credit retains outwards. In the total credit retains outwards, it's 435.5. So in the retains outwards account, we can say 31st of April, we'll say total purchases retains. So our total purchases retains, we're going to credit it with 435.5. So we can find our balance carried down, you can find the total there, and you can find the balance brought down. So the total there is going to be 435.5 on the debit side and 435.5 on the credit side. The balance carried down is going to be shown on the debit side as 435.5 on the debit side, and the balance breakdown is going to be shown on the credit side as 435.5. So that's how you can draw up the retains outwards daybook. Where you have questions, please ask in the group. Thank you. The program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless. So let us now look at the general journal. The general journal is a book of original entry in which transactions that cannot be recorded in other prime entry books are recorded in order of dates when they occurred. In the general journal, the date of the transaction, name of the account to be debited, and name of account to be credited, and the amount of money or money value of the transactions are recorded. The general journal is also called the general proper or principal journal. Types of transactions recorded in the general journal. So we're going to start by looking at opening entries or balances. Balances brought forward from the previous period to open a new set of books are first recorded in the general journal before being transferred to the relevant ledger accounts. Such opening balances include balances of assets, liabilities, and capital. Then we have closing entries. A closing entry is a journal entry made at the end of the accounting period. The closing entry is used to transfer information from the temporary accounts to the permanent balance sheet or income statement accounts. The purpose of the closing entry is to bring the temporary journal account balances to zero for the next accounting period. At the end of the year, all revenue and expenses accounts are closed. Their balances are transferred to the trading account to be used in calculating the gross profit, and to the profit and loss account to be used in calculating net profit. The transfer of these closing records of accounts is recorded in the general journal. Then let us look at purchasing of fixed assets on credit. Fixed assets like land, furniture, and machinery bought by the business on credit are not recorded in the cash book since there is no immediate transfer of cash involved. They are not recorded in the purchases journal since they are not bought for resale but for use. The term purchases in accounting is strictly used to mean value of goods bought for resale. So they are first recorded in the general journal before being posted in their respective ledger accounts. Then we have sales of fixed assets on credit. When fixed assets like land, furniture and machinery are sold on credit, they are not recorded in the cash book. Since there is no immediate cash transfer involved, they are not even recorded in the sales journal since they are not bought for resale. The term sales in accounting is strictly used to mean goods sold by the business but must have been bought for resale. So they are recorded in the general journal before being posted in their respective ledger accounts. Then we have collection of double errors detected in double entry in recording of transactions. Collection of errors discovered by the trial balance or using any other method are recorded using double entry in the general journal. Then end of year adjustments. These are changes made in the values of assets, liabilities, expenses and revenues to get the actual value of such amounts when preparing financial statements. Such adjustments include depreciation, accrued or outstanding expenses, accrued or outstanding incomes, prepaid incomes or income received by the business in advance and prepaid expenses made by the business in advance, and provision for bad and doubtful debts, among others. These adjustments are first recorded in the general journal. Then we have issue of shares. When shares are issued by the company, they are first recorded in the general journal. The program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless.